Hello everyone, welcome to another live stream. I hope you're doing well. Hope you're having a good Friday. So the biggest news that has happened is that basically we got an intervention on the yen. Okay, so we got an intervention on the yen, USD, JPY. As you can see here, this is Swiss yen moving down now a bit. Amaro, this market is trash. We need to cut it. So let's see, USD JPY. Okay. So essentially, this is the intervention. Massive, kind of classic in size if you measure it. So interventions of the BOJ, the average size is around 3 to 4%. The big ones, at least. We had a couple of small ones before. So we had a couple of smaller ones like this one. I think it wasn't really 3 to 4%. Oh, it was 3%. Okay, that's fine. It was 3%. And I'm expecting this candle to kind of close like this. So with wicks, with large wicks on both sides, that's kind of my forecast. So a similar move to this one. I was also looking at the Bank of Japan, and I was expecting a potential rate hike. Okay, I was expecting a surprise hike. So you can see BOJ outlook report, BOJ policy rate, a monetary policy statement. I was expecting for the actual number to maybe print higher than the previous number. That didn't really happen. And if we go to the interest rates, let's go to interest rates, data, rates. JPY only. So yeah, this is it. So basically they have been on a path to hike rates and now they have held. So that was interpreted as a bit of a dovish measure, I would say. And the initial reaction from that was, let me just check something out on my DarwinX. I'm trying to close some of my positions to hit the DarwinX gold criteria, but yeah, I need 30% return, and I'm just above it, slightly above it. But if I close those positions, the commissions and the swaps, sorry, the spreads would probably take this below 30%. So that's the conundrum that I'm currently in. But anyway, I'm gonna keep on monitoring it. So yeah, we essentially got the BOJ, and we got kind of the run up into the BOJ. So the event, no change in rates, and the commentary was hawkish. I have to say so. The commentary from the BOJ was hawkish. They did signal inflation as being a problem and that they may hike in the future, but the reaction from that was minimal. Then we got probably another intervention right here. So a big candle. I can check on the breaking news. So let's take a look at market moving. It's not yet here, but it's definitely a big move. Definitely a big move, which got a full retrace. So surprising a little bit. Looks like people are just buying into this weakness. It could be because they're thinking that maybe the Bank of Japan, as they haven't hiked rates, maybe they won't really hike in the future anytime soon. So maybe some people are trading this as buying the bottom of the intervention and betting on a retrace to the upside, because yes, the last time where you had the initial push, we did eventually fill the whole candle. So I'm sure there's some strategies just buying the intervention or buying the bottom of the intervention and betting that we will retrace the whole move, and it could absolutely happen. So that is definitely a possibility. USD CAD, I was in a position, I got taken out of this one. So this one I'm out now with the whole intervention, with the whole meltdown. So with the whole meltdown of the dollar against the yen, pretty much if you had a bullish dollar position, you probably got crushed. So yeah, I took a loss on USD CAD, but my Swiss yen is running fine. So Swiss yen is doing okay. Yeah, it looks fine, Swiss yen. So it's running in profit. I have closed 30% of the position to take some profit off, and I'm letting the rest run. Okay, that's my game plan. So here's the CAD. Let's remove the flag. Let's lock this and let me put it back on the Forex side like this. Okay. Essentially, the only position that I'm running is Swiss yen. That's the only thing I have at the moment. I'm looking to deploy some capital into the dollar potentially, because for the US dollar, you did get the Fed meeting. So the Fed meeting happened on Wednesday. They didn't hike rates, and the press conference was actually, by my interpretation, the press conference was more dovish than expected. Okay, so the dollar actually sold off after the conference. Stocks, they did go up. If you look at the SPY, so stocks did push to the upside. The Qs, yep. So the SPY and the Qs, this was kind of the bottom. After the Fed meeting, this was the bottom. I did have an attempt on the Nasdaq. I did try to flip to risk on immediately after the meeting. Got stopped out. Of course, if I didn't get stopped out, this would have been an amazing trade, an amazing catch of the bottom. But it is what it is. It is what it is. Most of the time, or let's say 50% of the time, I will get taken out because my win rate is sitting at around 45 to 50%. So this one didn't really work out. Now the question could be, do I think that stocks go up? So do I think that stocks go to all-time highs? Because the Fed is, looks like the Fed is going to be more dovish. And I don't know. I think we just stay in this range for now. And that's a problem because I don't want to trade inside of this range. I'm buying some individual stocks on breakouts, but the criteria is that the S&P needs to be on a clear uptrend, which right now it is not. It's flat, it's range bound. So I don't personally think that the Fed will be enough of a catalyst to push stocks up. And also, let me just send the link to James because I do think he's coming on after me. Let's go to plus, copy, chat, live stream. Okay. Pasted. So if I can sum it up, this week we had the Fed, which turned out more dovish than expected. Dovish. We had JPY intervention, and we had the BOJ, which I would say, I don't know, kind of neutral. The BOJ was kind of neutral. So out of these events, how can you structure positions? That's probably the question. And just to cover the yen, I am going to hold my Swiss yen short. I'm going to hold this position. Let me just see GJ. What's GJ doing? Is GJ going down a bit? Nah. So for Swiss yen, I'm going to keep on holding this short because I do believe that the Japanese government, they want to see a stronger yen. They want to see the JXY go up more. And they have tools at their disposal to push the yen to the upside. They can do an intervention. They can do a surprise rate hike, which they didn't do, but they may do one in the future. And they have ordered the pension funds, the Japanese pension funds, to sell foreign assets and buy domestic. So essentially sell US bonds and buy Japanese bonds. So because of all of that, I'm thinking that puts pressure for basically the yen to go up. Okay, I think that could be a good catalyst. So what did I have here? The S&P or the NAS? So that's concerning the yen. And as far as the dollar goes, Well, I do still think that inflation goes up. So if you look at the port watch, if you look at the IMF port watch tool, and you look at what is happening recently, you can see that no ships are passing, or very little amount of ships. So here the trade was closed, here was open, and now it's closed again. If you look at the transit trade volume, it's pretty much minimal. So I believe that basically inflation, the CPI, goes up even more. Yes, the latest print was cooler than expected, and Warsh talked about that. So if you watch the press conference, Warsh actually mentioned that the inflation print came in cooler than expected, the latest one, and that's, he says, encouraging, which is complete bullcrap. But if you look at the overall picture, inflation was rising when the strait was closed. The strait is closed again. So I believe inflation continues going to the upside. I think maybe even above 4.2%. So up until the next CPI print, I think a good trade could actually be to buy the US dollar. If you look at Wednesday, August 12th, we're getting the CPI, and on August 13th, we're getting the PPI print. So going into that event, I think buying the US dollar could be a good trade. But selling that position before the Fed is another good trade, because I'm betting that the next Fed event is going to be more dovish. If you look at the Fed Watch tool, so if you look at the Fed Watch tool, markets are still pricing in a rate hike for the next Fed event. I would say that's not going to happen. I would say the Fed that we're getting now is pretty similar to the Fed that we saw in the last 5 years, which means that they don't really care that the inflation is way above target. They are looking for the extreme. So the last time that they initiated hikes, inflation was sitting at around 7%. So if it's sitting at 4 or 5%, I don't think we get a hike. I think we just get no change and essentially a dovish meeting. So I wouldn't be long dollars going into the September event. Going the opposite way could be a good scenario. Okay, so going risk on, or maybe selling the US dollar right after the event, watching the event. If it comes out dovish, that could be a good way to go. So that's kind of what I'm seeing. Still buying the yen, short term, buying the dollar up until the next CPI print, and then possibly selling the US dollar in September after the Fed event. Okay. Yeah. So Sluggy says they say they care about inflation, but they don't. It's just words. Yes, with the first meeting from Warsh, the meeting that happened before the latest one, Warsh was pretty hawkish. He signaled high inflation. He told us that he is going to have a firm stance on inflation, and now he walked back all of that. So it's back to being dovish, and it's back to inflation. So it's back to inflation being way above target. That is how I'm seeing things. And I do want to mention, if you want to join the A1 Trading free Discord, I will post the link in the comments. So give me 1 second to grab the link. Let's go to stream links. Copy that. Paste. So in the comment section, you will find the link to join the free Discord. You can also find it in the description of the live stream. Now, if you want to become a paid member of the Discord, so if you want to get access to trades from Chris, Iwind, Chris Pulver, or Nick, Alan, and me, well, we have the paid Discord as well. Now, this Swiss yen position that I have here, this Swiss yen short, it was a signal in the A1 Discord. So if you want to get trades such as this one, well, definitely do join us. There's a massive sale running at the moment, and you can get 45% off with the code Marco. This is for the A1 Trading Discord and for the Edge Finder. So if you want to get the Edge Finder, this is the biggest sale of the year, and this is the best time to get it. Okay. Now, as I usually tell people on these live streams, the first thing you need to do, whatever you're buying, especially in the trading niche, you need to go to Trustpilot. So if we go to A1 Trading Trustpilot, look at the reviews, 4.8 stars out of 5, 242 reviews. I would say that is really, really good, especially for the trading niche. Then you go to see all reviews, check out the ratio of 1 star to 5 star, read through some of them or read through all of them if you want. So it's only 5 stars here. And yeah, basically you don't have to listen to me, just read all of the reviews. So the Edge Finder personally was a massive, massive game changer for my trading, and it made my profitability skyrocket. It made my drawdowns a lot smaller, and that is what really transformed my performance. So just want to repeat, if you want to get the Edge Finder, there's a massive summer sale running, 45% off with the code Marco, and today is the last day, I believe. So if you want to take advantage of that, today is the last day. Okay, so let's see comments. What opportunity? Hello, Kevin. Welcome. Mike, good morning. Pakistan mentioned, I'm out of this market. It's trash. We need to cut it. Morning from Victoria, Texas. Sluggy, hello. Sluggy sold Bitcoin and Nikkei today. Actually, selling the Nikkei is not a bad way to go. So selling the Nikkei would have been better if the Bank of Japan was actually super hawkish, and if they did a surprise rate hike, that would have worked even better. But this is not a bad trade. So the intervention definitely doesn't help. Like the yen appreciating definitely doesn't help the Nikkei. So we have hit a trend line here. I know Nick is in this position, so Nick took a short position here, which is not a bad way to go. So I do like that. Bitcoin personally, I wouldn't touch. Bitcoin is just super flat. I don't see much movement here. That goes for gold as well. So gold just super flat. I know you guys love gold, but personally, I don't see much opportunity in trading gold at the moment. It seems very flat, seems very range bound in this area. GBP, JPY. Yep. Let's look at GBP, JPY. I mean, you're mostly betting on the intervention to hold here. And looking at the past data, in a lot of the cases, the intervention can reach a full, basically fill back to the previous level. So we can go down a bit more, maybe give you a better exit point. But yeah, there's also a chance we fill that. As I mentioned, I am long on the yen. So I'm holding my Swiss yen short for now. So GJ shorts could be good as well, actually. You know, if I think about it, if I'm short on the Swiss yen, basically I could be short on British pound against the yen as well. The bond rates will continue to climb. Let's look at the bond yields. Well, we did have the massive spike on Wednesday after the meeting, because the bond market definitely doesn't love a super dovish Fed, especially a Fed that is dovish during high inflation. That's a big, big warning sign for the bond market. Could you look at the Nikkei? Okay, we have looked at the Nikkei as already. Fed didn't hike to save the yen. Why is that beautiful glass has water instead of whiskey? Maybe it's vodka, but no, it's water. Where's Nick? Nick is going to come on in, I think, 1 or 2 hours. Wait till the Nasdaq hits 29K, then short this fake market. Slug says, I exited my NJ long right before the FOMC. That, yeah, you did dodge a massive bullet. I expect the JPY to catch a bid during dovish FOMC, but nevertheless, yesterday we got the yen intervention. BOJ is stupid. First they spend big to intervene, then they hold back on hikes and never do surprise hikes. Well, that was my bet. So my bet was, if you look at USD JPY, that they come in with a surprise hike like they did in 2024, in July of 2024. And it is kind of stupid that I didn't do the same thing again. So I don't know why, but I guess that was just the decision. So they did an intervention here. It actually had follow through. As you can see, it had some follow through right there. And then they did a surprise. Yeah, here it is. So surprise rate hike. See, July 31st, 2024, forecast 0.1, actual number 0.25. And that made the yen gain even more value. So that was my bet this time, and it didn't really happen. That's why we could maybe see the price retrace again. We could again see something like this. So yeah. It would have followed through if they did a hike. Maybe Takaishi influence. Could be. Because the current government in Japan, so Takaishi. The current government in Japan is pretty dovish. So they don't really want to see higher interest rates, and the higher interest rates would absolutely hurt the Nikkei. So the Nikkei would, I think, pull back a lot. The Nikkei would correct quite a lot if we did see what is it, higher interest rates. Okay, so yeah. Let me just check who is coming on after me. So let me see who is the next guest for today. I think it's gonna be James. Yeah. Okay, so James should be coming on. Thoughts on SanDisk? They went crazy yesterday. Let's take a look. SNDK. I think that's it. Yeah, a bit of a bounce. And I also saw on X that the Leopold guy got liquidated. So he's a massive player in artificial intelligence. Had a big hedge fund. He was over leveraged, it seems, and he got out right at this bottom. But if it's better if we put it on the Nasdaq. So he got out right at the bottom. I think the bounce happened because the Fed was pretty dovish. And you can see right after the Fed meeting, we got that push to the upside. So the market was expecting a hawkish Fed. The market was preparing for a hawkish Fed, and the stocks were selling into the event. Now, what you will usually see is there's a, as they call, a preparation trade. Okay, a preparation trade is basically a preparation into the Fed, and that is basically a trade where they sell stocks going into a potentially hawkish event. Okay, so selling stocks going into a potentially hawkish event, and then once the event turns dovish, well, then it goes up, and stocks tend to go up. So that's what I'm thinking happened in this case. Are we expecting August to be a low volume, low volatility period? Yeah, kind of. So summer months. Well, July, I would say July was pretty slow. If you didn't have the sort of the Japanese intervention, I would say it was mostly pretty slow. So that's kind of how I'm seeing the situation. And it's normal. Usually in September, the momentum, the volume, the volatility kicks back in. Okay, I need to keep monitoring my Swiss yen here. So USD JPY. Yeah. So basically, let me show you. If I go to my DarwinX, so I'm doing my DarwinX, right? This is a platform. It's similar to prop firms. It's basically a platform where you build a track record and you attract capital. So here it is. This is my track record so far. Now, I currently have 186,000 euros under management, but my goal is to open this up to outside investors. And to be able to open it up to outside investors, I need to reach Darwinia Gold. Okay. And to reach the Darwinia Gold, I need to hit 30% in the last, 3 years. So I'm sitting right at 30%. If I close my positions, the commissions may push me below that, and that's the conundrum. Should I close them and go into Darwinia Gold to get access to outside investors, or let it run? For now, I'm letting it run. So yeah, that's why I'm watching Swiss yen constantly. And I probably should have exited when we dropped. So this was the initial intervention. This was the second, maybe smaller intervention, and it almost got a full fill. Like this blue candle was pretty big, especially on USD JPY, almost a full fill of the big red candle, which is pretty strange. Okay. Anyway, oil is up. I think oil can hit 100. I think oil can hit 100 because the Strait is closed. The last time it was closed, we hit 112. So I think this is on a path to the upside. I did notice that the gas stations here in the European Union, they're limiting fill-ups to, I think, 300 liters per person. So even the big oil companies are expecting some sort of a crisis, which is a sign. It's a sign. It's a sign that probably the Strait will remain closed for a longer period of time. It's a sign that even the companies don't think that US and Iran can reach a deal anytime soon. It's probably going to be another forever war. And oil is going to be elevated for longer. That's why I think inflation continues to go up. And the trade is basically, so buy the dollar on inflation prints and sell the dollar right before, or sell the dollar right before a Fed event and go risk on right after the Fed event. That's kind of the game plan at the moment. That's what I'm seeing. And it's tough. It's tough to trade because the Fed just doesn't want to turn hawkish. The Fed just doesn't want to come in and control the inflation. Like the last time that they started a hiking cycle, inflation was at 7%. Okay. It was somewhere here. I think it was April 2022 when they started a hiking cycle. So inflation was way out of control. That's why I think we can hit 5%, maybe even 6% before the Fed says, okay, let's start hiking rates. That has been the classic Fed of the past. Okay, so I do want to mention again, today is the last day for the huge summer sale for the Edge Finder. So Edge Finder is 45% off, biggest sale of the year with the code Marco. The link is in the description of the stream, or just type in Edge Finder A1 Trading. Okay. This is it. And you can get 45% off. So do take advantage because, again, biggest sale of the year. I still have 1 more minute. So Sluggy says, if BOJ had hiked today, they would have put serious pressure on the carry trade and dollar. Yeah, it would have been big. Absolutely. It would have been a massive, massive move lower. Probably similar like this one. Similar to this one, just a massive slide lower. It would have been massively tradable as well, because I remember I managed to make quite a lot of percentage during this downtrend. It was just a super, super clean move down, super clean downtrend, and very easy to trade. But looks like we're not going to get it again. Anyway, that's about it from me. Thank you very much for watching. You can catch me again in 2 hours during my second segment. And James is going to come on in like 20 seconds. I'm just going to play sort of a transition video. So thank you, and see you in 2 hours.
If you're looking to get funded and want to save big on prop firms, check out our website, a1trading.com. On our website, we have a massive catalog of different sponsors and prop firms that are offering really competitive prices to our live stream viewers. On the screen right now, you see a QR code. If you scan that, it'll take you to this page that I'm looking at to scan all the different offers. You can also filter by one-step and two-step accounts. You can also look at futures, Forex and CFD prop firms, and even prop firms offering stocks. You can also select your preferred prop firm challenge size and check out our menu at the top for tons of different prop firm perks and giveaways. For example, every Monday we do a weekly prop firm giveaway that you can sign up and add your name into the hat for free. Additionally, we have prop firm reviews for notable firms, and we even have a side-by-side comparison tool where you can compare two firms head-to-head. Save big and find the right prop firm for you over on our website, www.a1trading.com. Thanks to our various sponsors who make this show possible. Now back to the content.
Hello, ladies and gentlemen. It's Friday. It's the end of the week. Let's get the beers out and the cigars and the whiskey and relax. How's everyone doing? Interesting moves in the market yesterday. I know we were on stream, or I was on stream for my normal segment. We were talking about the BOJ, the MOF, and the yen. And a couple of hours later, we have the drop. However, for those of you that have been paying attention to what I've been saying, you may have caught it. I didn't. I don't want to sit here and be like, I told you it was going to happen. I mean, it did, but I didn't. I've not taken any trades off it. So we'll take that one. But here on the daily time frame, hold on, let me just move this. Here, we did the same thing where we come down to the 200 moving average and reject. And that's all I was talking about. You know, we were having debates. Is it worth buying dollar yen or getting involved with the yen anyway? My argument really was not necessarily. I don't think it was. I would have rather avoided going short trying to catch the intervention. If any of you did, well done, fantastic. However, I didn't like that. It was just a bit too, a little bit too risk on for me. Not risk on in terms of sentiment. I mean, risk on in terms of it was too much of a risky position to take for me. So my idea was to wait for it to come back down here, reject, and have the continuation to the upside, because obviously the BOJ did hold rates. The carry trade is still alive for now. So yeah, I would still be very happy to buy dollar yen. Now, what I'm waiting for at the moment is actually just to see, do we follow the same pattern? So as you can see, we come down to this 200 moving average on the daily on interventions, but we seem to sort of double bottom around it, not just have a singular sort of V-shaped recovery. So I would really like to see the move to the downside, a little bit of a pullback, another low put in. I'd look to enter here and then get into that long position, looking for a continuation to the long side. So we'll see if that happens. But it does seem that 164 is the new line in the sand for the MOF. So it will be interesting again to see, can we break above 164? Do we consolidate? Do they continue to defend that level with interventions? So yeah, we'll see. Definitely interesting right now, because there was a little bit of talk yesterday about the fact that why would they put so much money in, intervene on the yen for the BOJ to come out dovish? Because essentially, you know, you pile money into an intervention, and I kind of thought they were prepping for a hawkish BOJ. So I thought they would decrease the yen, get the sentiment flowing, and then we'd have the BOJ come out in the night or early morning, wherever you were at the time, or whatever time zone it is for you, and then it continues to run lower. You know, a really big movement on the yen to the upside, or dollar yen to the downside. However, we didn't get that. We got an intervention and, you know, very little from the BOJ in terms of hawkishness. So it seems like actually this was a bit more of a padding move ahead of the BOJ to allow some room for a less than hawkish event. So, guys, how is everyone doing? Are we expecting August to be a low volume, low volatility period? Yeah, August is normally quite a flat period, sort of summer away from the markets. Although, yeah, it typically slows down. But to be honest, I'm not really seeing any signs of a slowdown in the markets at the minute. So everything seems pretty normal. In fact, slightly higher volatility than what I normally see at this time of year. Sluggy, good to see you. If BOJ had hiked today, they would have put serious pressure on the carry trade. Yes, absolutely. It would have been a bit of a disaster for the bulls. I think it would have still held in terms of the carry trade dynamic would still have been there, but the yield gap would definitely have been shrinking at that point. So we would have definitely started seeing unwind. Gold chart, yeah, we can have a look at gold. Max, hello. Shirls, hello to you as well. Good to see you all. Okay, let me just check something because I've not seen a new message come in. This happened last time. The reason I'm checking is because I missed loads of messages because the chat froze on me. I just want to make sure that's not the same case today, so I'm not missing things. All seems good. KDX 7234. Hello, James and everyone. Hello to you as well. Hope you're good. So my open positions, I am still in my gold longs, but I did also take a shorter term position on gold with a stop. Now this one actually isn't looking too fantastic at the moment, but I'm willing to let it go and just see what happens. So with gold, very simple technical approach here. We've got these higher lows that have been getting printed, fib from the low to the high, pull back into the fib zone, lined up with the 200 moving average, and a little bit of previous structure on the left, nothing too crazy. So from a technical point of view on the H1, it looked okay for a little bit of an intraday attempt. And the Edge Finder has upgraded gold to a very bullish score of 7. So although I don't really sit very bullish on gold in the short term, my strategy came into play, fib pullback, Edge Finder, it was worth an attempt, not a huge deal. So yeah, I'm currently long gold, a little bit underwater, about 0.5% underwater on this one. So nothing too bad, but we'll see how it goes. For the rest of the day, I suppose. I was going to say the rest of the week, but the market's closed soon, so that's not really the case. And euro dollar, I decided to go short euro dollar. This one isn't really with the Edge Finder. The Edge Finder is quite bearish on the dollar. In fact, let me just pull it up again for you here. So we can see the US dollar individually. So the individual USD currency is getting a bearish score of -5. We can see dollar Swiss, dollar CAD. What else do we have here? Gold, silver, Australian dollar, euro dollar, New Zealand US dollar, and pound dollar, all bullish. So it's definitely an anti-Edge Finder position. However, what this does is it offsets a little bit of my risk on gold long. So if gold long doesn't work out, at least I've got a euro dollar short playing out. So playing dollar both sides in that case. And also I really do like euro dollar to the downside. I still think it's a great trade, although it might be short term not so great, but longer term it might work out a little bit better. So what I mean by that is seasonality on euro dollar is quite favorable to the downside, but not yet. I think it's the end of or the mid August to the end of August, we start a pretty significant historical downtrend on euro dollar into the end of November, start of December period. So that's one thing I'm looking to capture. But again, that might not play out in the shorter term. I have to re-enter a position later on in the future. But the daily, really nice downtrend here, pull back in towards the 200 moving average, fib pullback, looks fantastic. And then we look at the weekly time frame here. It's exactly what I've been talking about for the past, well, actually, I think probably the last 1 to 2 years I've been doing these streams. I've been looking at this pattern here with these lower highs that get formed on the weekly and monthly time frame. And then we have these very consistent drops to the downside. So I'm looking for a continuation of that as well. And also still playing on my dollar bullish idea. Granted, not as strong as it was previously, but I wouldn't mind taking an attempt, which is exactly what I'm doing. Nasdaq. Now, this one not playing out very well. So it's funny. I was in bed last night and I got an alert. Nasdaq's hit the entry point, and I was like, okay, you know what? I'm going to go for it. So something else we've been talking about on my segments was the fact that Nasdaq broke below its daily level of support here. I was looking for, my very typical break, which we had, then the retest into the level and a continuation lower. And this lined up really perfectly with the fib. As you can see, the 61.8 and the 50% retracement are perfectly aligned with this previous daily low. So from a technical aspect, my strategy could not have come in better. So there was that side of things. Like, okay, I'm going to take an attempt because clearly we have some downside pressure here. The H4 is in a bearish trend of the 200 and the 50 moving average. The RSI is a little bit overbought. So I'll take the short position. So that's that, although it's not working out fantastically and we don't have an Edge Finder reading. So by no means is this an A-star trade, as some people would consider, or an A+ setup. However, interestingly enough, after I took the NAS position, I saw Nick sent a signal on the Nikkei. So I was like, okay, I do actually like the Nikkei more, and I didn't see the setup. And Nick and I trade in a very similar way: Edge Finder, fibs, pullbacks, major levels. I'll trust Nick. So I am in the same position. I'm not sure if if actually you've not seen Nick today, have you? So I'm not sure if he's updated you. But either way, credit goes to him for this position. I don't want to take any of that. But from my point of view here, again, it's very similar to the Nazi in terms we are in a downtrend here. We've got a really nice level of resistance that has been continuously rejected. Came in towards the fib, which is obviously where I entered initially. Didn't quite respect that level, although it didn't hit stop loss. Thankfully enough. And we have seen a little bit of a move to the downside back towards entry. But yeah, we'll see how this one goes. So I'm quite short actually on risk assets. So obviously short on the Nasdaq, short on the Nikkei at the same time. It's a little bit of a risky game to play. But the difference is the Edge Finder does have the Nikkei as a bearish reading. So I'm a little bit more confident in the Nikkei than I am in the Nasdaq. So we'll see how it goes. But as I've also been saying with the Nikkei is we are still in a really good, strong daily bullish trend. So I am a little bit cautious actually that yes, this trade might work out actually. Now I'm looking at the R&R, it might be fine. But there is a possibility that we actually just have more of a mean reversion style pullback towards this 200 and continue to rally from there. So my eyes are definitely peeled. Definitely paying attention here, but yeah, that's really all that's going on. And EuroCAD is doing quite well. So this is a break-even trade, or a risk-free trade, I should say. So yeah, we're just letting this one run and see what happens. Just bear with me. Let me have a sip of tea while I read your lovely comments. Gold is range-bound markets, unless it's not. I think I know what you mean, Sluggy. Yeah, gold is not a pretty market right now. By no means is it easy. Aussie New Zealand finally bearish. Is it? Ooh, Sluggy, nice one. Let's have a look. H4 is definitely bearish. The daily, where's the 200? I'll be honest, I'm not a huge fan of it just yet. I want to see these lows get cleared out. So for me to really get interested, although the H4 looks great, but in this case, because there is no, oh wait, hold on. Sluggy, I've just realized what you were talking about, the Edge Finder. Oh, Sluggy, I might have to give you a kiss. Yeah, this might be a good play, actually. I've just seen, or Sluggy just pointed out that Aussie New Zealand is now bearish on the Edge Finder with a score of -6. For some of you that have been watching my segments for basically since the start of this year, some of you will know that I did attempt to go short on Aussie New Zealand in this area. I ended up closing it because it was range bound for so long, and it's a negative swapped position. So I was losing money on a break-even trade. So I just closed it because there was no reason to keep holding it. At the time, we had no Edge Finder reading either. However, now the Edge Finder has flipped bearish. The daily is looking quite precarious. What was I saying? I can't remember what I just said. Anyway, either we take an H4 entry, which I'll cover in a second, or we could be a bit more conservative and be a bit more patient and wait for these lows to break, wait for a break of this daily 200, and then look for a pullback entry, something like this. The positive to that is obviously you've got a bit more confirmation that the daily trend's broken. We've cleared previous lows. Overall, that just seems like a bit of a safer approach. But then we've also got the idea of being a bit more aggressive on the H4. So in this case, it would be very simple, just looking for a fib pullback here. So fib from the high to the low, pull back into the fib zone. There's really not that much on the left side for us to pay attention to in this case, and then that break and continuation. So what might be worth doing, and as always, is not financial advice and it's not a signal, but it might be a little bit of an option here to actually take this aggressive approach we just spoke about with, I don't know, let's say half risk or 0.25, whatever you're comfortable with. Again, not financial advice. I'm more thinking out loud here. Something like this. And then if we do get the break lower, something like this, then actually that would be a good opportunity to just scale into the position, something maybe along these lines here. So that's my thought process at the moment. Again, I've kind of been thinking out loud because I haven't really been watching this market, so I've had to start from fresh here. But on a higher time frame, we do have a really nice level through the weekly here where we had a previous low and very clear rejections. But the most interesting thing about Aussie New Zealand is the mean reversion idea, which lines up now perfectly because we've got the Edge Finder there. We've got the H4 that's changed trends. We've got the daily that looks very on the edge of changing trends. So what we've had is the what is it, 14-year range, something like that. Yeah, so since 2014, 12-year range, give or take, where we've just not done anything. You know, this market was renowned for just being either a range trader or a mean reversion trader's dream. So, you know, you would just sell the highs, buy the lows, and that's all you had to do. Obviously, again, that's so much easier in hindsight, but you get what I'm saying. So it was just nothingness here. Every time we tried to break out, we failed. So now there is the idea that we did have such a violent, quick breakout on the hawkish RBA earlier in the year. We could actually see a return, even if it's just back to the high of the range, something like this, for maybe a larger break and retest. I don't know. Obviously, I'm not going to try and forecast a move on a weekly time frame like this, but hopefully you get my point here, that it's not just the fundamentals that are now bearish. We've got the trend, we've got the daily that's almost there, and we've got again that mean reversion higher time frame idea. So I really do like this, and I actually think I'm going to definitely consider. In fact, sorry, not consider. I'm going to put an alert on this 50% retracement because I really do like it, and I'll add it to the watch list. So there we go. That is, ladies and gentlemen, a perfect example of how you find a trade with the Edge Finder in less than 5 minutes, and with Sluggy giving you a signal. So seriously though, if you don't have the Edge Finder, use code ELITE, because again, all I did was look at the Aussie New Zealand on the Edge Finder, see it's bearish, and have a quick look at the technicals, and there we go. Money printer turned on. I took silver today, so let's see. For now, not looking to bounce on the fib. Yeah, Max, are you long or short on silver? As I said earlier, I am long on gold, but it's not looking great, to be perfectly honest. But luckily, well, not luckily, but I am hedged, obviously, in the euro-dollar short. So if the dollar does something crazy, either one of them will work out. Well, you know, ideally. The way I'm playing the dollar. Who is calling me here? Sorry, guys, give me 1 second. Australia. Who's calling me from across the globe, calling me on a Friday afternoon? Who do they think they are? Hold on, I need to go on Do Not Disturb. There we go. Okay, so what were we talking about here? I'm playing the dollar by buying and selling Bitcoin. Oh, sorry, playing the dollar is selling Bitcoin? Sluggy, do you mean you're buying and selling Bitcoin, or you're playing the dollar by selling Bitcoin? I'm not sure. I'm a bit confused by that one. Jeremy, good to see you. Shorts are trapped. In which market? Hi, Jim. Sorry, I wasn't clear of my question to Marco. Sandis moved over 40% up yesterday to 980. Oh, sorry, from 980 to 1420. Why such a large cap have such a crazy move in 24 hours? I'll be honest, Richard, I cannot give you an answer for that. I don't think. I don't even know what the ticker is. I'm not a stock guy. What is it? How do you even spell it? Oh, it's just SanDisk. Okay. Let's see if TradingView just has a quick answer for us. I'm not seeing any news here. Yeah, I'll be honest, my friend, I've got absolutely no idea. Although, was this earnings? No, earnings isn't yet. No, I've got no idea. I would suggest getting a stock box. Again, don't come to me for stock information. Yeah, I don't want to start talking on things I'm not fully educated on. EU retreats to 1.15. Yeah, we'll see about euro dollar. Again, I am kind of safe in relation to the dollar because I'm long and short at the same time. The problem is the edge finder really. Oh, no, sorry, the edge finder is not the problem, but the issue really is that the edge finder is very bearish on the dollar at the moment, and I personally do see it a little bit more neutral, slightly bullish. So I'm very sort of, I'm in a bit of a middle ground really with the dollar. I'll start DCA on Nikkei. Yeah. Oh, wait, hold on. Let me put this back. There we go. Move that down. Okay, sweet. So the Nikkei, yeah, I wouldn't mind picking up some of these markets, some of the US markets, Nikkei as well, on larger pullbacks or larger moves to the downside. I'm not 100% satisfied to do that yet, though, because I'm a bit skeptical to say this, so don't take it too literally because I could be completely wrong. But I do have the feeling this is the start of something a bit larger. And again, I'm not going to put much money on the line. I've got the short on the Nasdaq and short on the Nikkei. Nothing overly crazy. No large money on the line here. I'm definitely not trying to call a financial crash or a recession or anything like that. But the fact that we've had such a long period here of just sideways price action, and then we had the Fed that came out, didn't really give us anything, and we've broken out this daily support level. It's just feeling a little bit like we're on the edge of a cliff. So we'll see. Again, I could be completely wrong, so don't do anything on that information. I'm just sort of, here for an hour, thinking out loud. That's how it goes. But yeah, I think the best thing to do, and again, not financial advice, I'm talking about me really, the best thing I do in situations like this where we're having downturns in the market is I actually load up into investment accounts. So I've got, at the moment, what was it, like 70% cash. The rest of it is invested into pretty much just the S&P. I keep my investing very, very simple because, again, I'm not a stock guy. But yeah, I'm largely sat on cash. So I'm investing on dips really because, over the next 20 years, I don't really care whether I get a 2% higher entry or worse entry or whatever it may be. Hopefully you get what I'm saying. Careful on Euro CAD. It sounds like oil's rising again. Yeah, we'll see. The thing is with Euro CAD, it's quite funny because I was sat on stream when it was just triggered. I think as I was on the stream, it was roughly here, about to, not about to hit stops, but it wasn't looking good. And I said I'm going to close the position after the stream because oil was strengthening at the time. It didn't look good with the situation with the Strait of Hormuz and Iran. So after the stream, or when I came back to the charts and my desk, it was actually doing quite well. I was like, you know what, I'll let it go because worst case, take a small loss. And then we had the de-escalations, and it actually worked out very well. And this is the problem trying to trade the headlines. And this is why I tell you I don't really care about them because they change so quickly. So yes, right now we could have a massive escalation. A headline comes in, this trade just plummets straight to stop loss. Or we could have the reverse. I've got no idea. You know what I mean? So yeah, I'm not going to account for it too much unless it's very serious or very, something that has to be accounted for, if you get what I'm saying. No homo, James. Oh, full homo, Sluggy. Don't tell my girlfriend. You love it, James. That's my exact play. Ah, fantastic, Max. It's funny, me and Max in the chat, we very rarely have similar positions. Actually, for the most part, we end up in opposite sides of the market. I remember when I was selling Aussie New Zealand, as I said earlier in the year, and Max was buying, and we both ended up just stuck in a range, and that's why I closed at break even. It was a bit of a nightmare for both of us, I think. The Aussie 2 years been choppy. Yeah, I think the Australian dollar is a bit flat. I mean, I wouldn't mind buying it, but overall, I've got really not that much. So when it comes to the Aussie New Zealand trade, I would need to do a bit more research after the stream and actually see what's going on in terms of both the central banks and do a bit more of a deep dive. Imagine, James, we catch the huge move on Aussie New Zealand. Well, Sluggy, didn't you catch the pound Aussie one earlier this year with me? So we could catch another one. We're like Pokemon hunters. Bro, SPX. Hold on. Okay, we'll do SPX in a second. I know I'm yapping here a lot, but again, my segments are an hour, so I do like to just break up the chart work with a little bit of a chat and then go back to the charts and back and forth like that. So we'll do SPX, and I see Christoph mentioned something about CAD Swiss, so we'll get to that one as well. I'm long silver, James, on the EF at 6. Yeah, so Max, that's God, I can't talk. That's the same as what I'm doing with silver. Sorry, gold, not silver. So yeah, I'm long gold based on the Edge Finder as well on the fib. So I think we're in pretty much similar positions, just in different metals. Okay, so the S&P or the SPX. I've not actually checked this one yet. However, it does seem like we are still just stuck in a sideways movement here. So there is nothing for me to do. So in this case, the Nasdaq looks more appealing because we've had the breakout. The Nikkei looks more appealing because we've also had the breakout. We've also got it on the Edge Finder. But with the S&P, there is no fundamental backing here for longs or shorts. The technicals, again, are just sideways. There is no direction here for me to do anything. So it's not even like I can sit here and draw a fib for you because there is no previous highs or lows really. It's just a range. So sadly, I'm going to have to leave that there. Hi, James. CAD Swiss currently making fib rejection. Okay. I'm just having a look. Is it on the Edge Finder? I don't think. No, there's no Edge Finder reading, but let's see what the technicals look like. CAD Swiss. Let me clear out the drawings. I've not checked this market in a while, so I'm going to have to start from fresh on the week. On the monthly. So high time frame downtrend, weekly downtrend as well. So something to keep in mind here, Christoph. If you're looking to be a buyer, which I assume you are, because that's how it looked on the H4 with the potential fib drawing, is the weekly 50. So what we can see here is since, when was this? Actually, it'll be since here, 2023, we haven't broken, or we haven't managed to hold above this 50 weekly moving average. And we're currently at that level again. So that's something you might want to think about. Again, if there's also no fundamental drives on the edge finder, it might mean that this actually is a little bit of a buyer's trap, technically speaking. So that immediately kind of puts me off. However, the daily looks like we might be having a little bit of a flip in terms of the trend. You know, we could see this 200 and the 50 flip over. What else do we have here? We've kind of double topped as well. So yeah, I'll be honest, Christoph, I see what you're saying. The H4 also does look quite good, but yeah, it's just that weekly time frame gives me the spooks, and this double top on the daily. I think it might be a bit of a trap. Could not be. You know, this market could rally to the upside. But yeah, just from my point of view, from a technical side alone, got to take a shot every time you hear Edge Finder on this channel. You'll be dead. I think we could attempt that, but I think the stream might last about 10 minutes, and we'd all end up in hospital getting our stomachs pumped. So, bro, I was wrong. I said let's talk about the S&P with the Edge Finder. Oh, sorry, the Edge Feeder. The Edge Feeder is an interesting one. Maybe we should petition for Nick to change the name from Edge Finder to Edge Feeder. Although that doesn't sound great. So yeah, I mean, there is nothing here. So technically speaking, as we said, it's in a range bound condition. There is no higher highs, higher lows. It's a dead market right now. Fundamentally speaking here, also, there is absolutely nothing. We've got a score of 2. So basically nothing. You know, it's a neutral score. Technicals are bearish. Institutional activity is bullish. Economic growth is bearish. Inflation is bullish, and jobs market's bullish. But yeah, I'll be honest. There's really nothing here for you, Nimish. Hey James, good to see you. Could I know why you are slightly bullish on the dollar? Is it due to macro factors or is it due to the technical analysis? I think we are still going to get the Fed hike. So I think yesterday, or over the recent hours since the Fed, we've seen a little bit of a repricing on the dollar. So if we go to the H4 here, we've seen a large drop off. These types of moves, they're not that sustainable. And we said the same thing over here. So when we have these super aggressive moves, we often do see some sort of correction of them. So short term, it makes me a little bit bullish just based on the price action. But also, excuse me, but also when we check, you know, interest rate expectations, you know, you can use CME FedWatch tool or whatever tool you use. We can see that we are still expecting hikes into 2027. I don't think inflation is going to stay cooler. I do kind of think we are going to see inflation pop back to the upside. I've got no news that we're going to have the Strait reopen. Oil reserves are going to continue to deplete. Energy prices are going to continue to go higher. Inflation is going to go higher on the back of that. So that's my thesis, but of course that is largely based on the Strait of Hormuz situation, which could change tomorrow or it could change in the next 10 minutes. But yeah, for now I do remain cautiously bullish. So by no means am I going heavy on the dollar, which is why I'm actually hedged long and short through gold and euro dollar. But yeah, my overall bias is still to the long side, and I would expect this pattern to continue, where we come down to this trend line and we have these bullish cycles from there. So we did the same thing here. We've started a new cycle, and what we can see on the weekly time frame is that we've come back. Let me go to pen tool here. So we broke these highs. We've come back down. We've had the break, retest, and maybe some sort of setup for continuation. But again, that's purely on the price action side. So we know that price action follows fundamentals, not vice versa. It's okay, James. It will be defined risk on the Nikkei on the asset I currently like. Fair enough, Sluggy. As long as you know what you're doing, it's all good then. How James think USD will go to 1.35 before falling? Very well could do, yeah. Yeah, we did catch Pound Aussie. Of course we did, Sluggy. Always good stuff. Sitting on the sidelines waiting for Aussie New Zealand to play out. This is the thing. So now we've got a new theme, I guess. It seems like, you know, we went from I think a lot of us were watching your the pound Aussie, Euro Aussie, a lot of the Aussie pairs earlier in the year. Then we shifted focus to Iran. I think a lot of us were pretty much just paying attention to oil, whether you were trading or not. That was the theme. Then, you know, we've moved on to the dollar temporarily on this bullish move when we had the Wash come out. And now it seems like we're in a little bit of a push and pull between what is really focused. Are we looking at Iran? Are we looking at the Fed? But we got no forward guidance. So yeah, maybe it's easier just to pay attention to the Aussie dollar. Or Aussie New Zealand, actually, specifically. Higher oil, higher yields, higher DXY, VIX below 17. Might have a volatile day. It's a good point. Yes, exactly. How do you form daily bias on NAS? My friend, a daily bias is nonsense. Just stick a 200 moving average on your chart. That's all you need. So this is why I use them. I'm not going to say this to insult you. I'm saying this based on what I've seen in the retail community. This daily bias idea comes from, I think, a large portion of the ICT and SMC crowd. It's just overcomplicating things for no reason. You don't need a daily buy. Stick a 200 on the chart, look on the H4 or the daily time frame. You can see where the market's going. So you'll get conditions like this where they're a little bit flat. That's a range. You typically want to stay away from a range because there's no trend for you to jump into. Whereas here, when we've got, you know, they're fanned out, they're moving to the downside together, prices below the moving averages, we're clearly in a downtrend. Just look to go short. And again, that is based on just technicals. We try to introduce fundamentals and incorporate those here, but from a really simplistic point of view, moving averages really are all you need for a bias. And then obviously the edge finder confirms it and tells you the fundamentals there and all of the good stuff. It puts the icing on the cake. The whole channel the whole point of this channel is to promote the edge finder. Yes and no. So mega danger D. This is a complaint I've seen quite a lot about, you know, the streams and sometimes the videos as well, is that, you know, it's just one big ad. And I'll be honest with you, yeah, it kind of is. But the way you've got to think about it is I make no money from these streams. So the only way I benefit from you guys watching this is if you use my discount code on the Edge Finder, or if you go to my YouTube channel, I might get a bit of ad revenue. I'm on track to make $50 this month from YouTube, which is amazing, I know. But also, Nick, you know, when it comes to, or the A1 Trading company, I should say, to build these things like host the streams, Discord, Edge Finder, Stockbox, it's not cheap, you know, and these streams are free. You pay nothing to be here unless you want to, you know, if you want to donate or super chat or become a member or whatever. Not many people do that though. So it's like TV, especially in the UK. I don't know about America, but in the UK, we have TV channels that are free to watch. Anyone can watch them. But the caveat is you've got ads, because that's how those channels make money. And it's the same thing here. So if you don't like it, go somewhere else. I'll be completely honest with you, because it's a win-win for everyone. You guys get some content from people. If you don't like, you know, one of the guests, for me, for example, click off and come back in an hour. You'll have someone else that might have different views. And you get all of this value from different people talking about different things, different markets and different fundamentals and drivers, and interacting with you guys for free. So the only caveat is there's a couple of ads. So again, if that is something that bothers you, I don't know what to tell you. Anyway, sorry, that was a bit of a rant, but I think that complaint really annoys me, actually, because I think that obviously I'm a bit biased, but I really do like what has been built here. I enjoy coming on these streams. So when there is these types of ridiculous comments, I feel like I've got to put them down. James, I sold Bitcoin, just a fun position technically. Looks good. And since NAS is selling, I reckon Bitcoin should too. Maybe. Yeah, I think and this is always a tricky one for me. I don't really have a view on Bitcoin because, again, as I always say, I'm not a crypto trader. So I find it very difficult to sit here and give you any level of real analysis beyond just technicals on Bitcoin or any of the other cryptos like Ethereum that I guess for sometimes. But yeah, I mean, Bitcoin to me looks actually a little bit like a buyer's trap. So I think what we have seen is actually very similar to gold, really, where we've had this really obvious level, you know, super clear. I think I would imagine every trader that looks at Bitcoin or pays any attention to it has this sort of weekly support level drawn up. we're going to have a lot of buying coming in here, which is what I think has defended the level so well. Obviously with headline fluctuations and so on, but I'm speaking very sort of broadly and generally here. However, the trend on the weekly is actually looking quite bearish. We've crossed below the 200 moving average. We failed to break back above. Here we failed to break or hold above this 50 moving average. The daily looks horrible, like a really clean downtrend actually. When I say horrible, I mean horrible for buyers. Technically looks beautiful to continue lower. You know, we're having these really clean pullbacks and continuations. It looks really good. So the next thing really is, are we actually just going to see a complete clear out of these lows and a continuation lower? It wouldn't surprise me. And then we look at the side of, we've spoken about this a couple of times on the stream. Sorry, I'm using one of these magic mouses. My other one broke and it's horrible. It flicks around everywhere. It's one of those ones where you like scroll with just this, and every time I click, it scrolls and it's so annoying. Anyway, these crashes, or whatever you want to call them, I mean, I think they are technically crashes in Bitcoin. So we have one over here, basically 84% if we round up. This one, 57. This one's basically 80. So if we take sort of a average and, you know, a low average, let's say 60%, we could end up around 40K, maybe 30K, depending on how deep it is. So this is still the lower end of Bitcoin's full potential sort of crash, if you will. So yeah, I am quite skeptical really that Bitcoin might be in a bit of a trap. By the way, when I say trap, I want to quickly clarify what I mean by that. I don't mean a trap in terms of, you know, liquidity sweeps and algos. I don't mean it like that. I mean a trap just in terms of, you know, market dynamics. People jump in at very obvious levels, and typically when something's obvious, it doesn't work out. It's like arbitrage, essentially. Ray Beast, good to see you. I think I'm quite behind on the chat, so I'm going to try and make my way through. Hold on. What do you think about New Zealand US dollar? I'm long. Okay, we'll take a look at New Zealand dollar. I'll put it on the chart and I'll catch up with the chat, and then we'll go back to this market. How would you use the Edge Finder economic surprise meter together with top setups? I'll be honest, Christoph, I don't really use the economic surprise meter. It's a good little gauge, but it doesn't come into play with the way I trade. I use the Edge Finder in a very simplistic way. It really is just top setups, and then it depends really what the top setup is made of. You know, if it's mainly driven by trend, seasonality, COT, and crowd sentiment, I'm not that bothered because I need to see the pillars. When I say the pillars, I mean the fundamentals, so growth, labor, and inflation. I need to see all those things first before I even consider seasonality and retail and institutional sentiment. But in terms of a DCA strategy, Christoph, talk to Sonics. I know, Christoph, you're in my Discord. Talk to Sonics. He DCAs, and I've showed Nick this actually. It's crazy. He DCAs with the Edge Finder using an ATR. I can't remember the settings or his exact approach. He did this. So he just finds the bullish and the bearish. He'll line it up with overall sentiment and some fundamentals like market rotation or capital rotation, things like that. And yeah, I think he's funded like 500K with some firms, and it's crazy. Anyway, move on. James, can you take a look at pound yen? Yeah, we can take a look at pound yen. How do you think the war will affect gold? Basically the same as we've seen. So if we see escalations, we're going to see gold bearish because that will just reinforce the idea that that the oil supply will remain restricted for longer, meaning energy prices will continue higher, meaning inflation expectations higher, meaning yields higher, meaning dollar higher, meaning gold lower. I'm long VIX. Historical average of September to August is plus 30%. Is it? Interesting. Maybe I'll have to have a look at that after the stream. James, a hedge fund name situation awareness. Oh yeah, I know the I can't remember his name, but yeah, he was massively leveraged on AI stocks, wasn't he? And yeah, I know he didn't have to sell to Citadel for like pennies on the dollar. I know it went really badly wrong for him. Poor guy. But he was named like the new Warren Buffett, really. And no, clearly didn't stick around for very long. This is good content. Thank you very much. I'm glad you're enjoying. If a fib rejections happens during Asia session, is that all? Yeah, I know I don't care about sessions, Christoph. Because I'm a swing trader, time doesn't I don't care about time. So, you know, when you talk to scalpers or day traders, they're very focused on sessions and opening volatility, opening ranges, things like that. It doesn't apply to me because, you know, if I'm sat in a trade for a week, if I enter it at 2 a.m. on a Monday, that has no effect because my, you know, the positions are so large in relativity to that sort of time frames effect on or effect by the session. Does that make sense? Free TV. Yeah, Naveen, actually, that was wrong. For anyone that knows, we're having a big issue with the UK TV and the TV license at the minute. What a joke. Anyway, I'm not going to go into a rant on that one. It was too calm. Now we have some Iran news. No wonder gold's going. Do we have Iran news? We have something come out. Hold on. Let me pull up my wire. Oh yeah, Iran attacks cause damage to vital military sites in Kuwait. What else do we have here? CPC may halt oil operations until safety guarantees from other states. Has discussed indefinite halt on oil and tanker operations. Okay, interesting. The reason semis were falling was because situation awareness positions were getting unwound. Which assets? Wall's holding GBP/USD long, very nice. I know we've not gone on the charts, by the way. I'm just trying to catch up with the chat, and then we'll go back to some markets. I know there's pound yen and New Zealand dollar on the list. Bitcoin's market cap is so huge now. Multi-trillion-dollar assets don't swing along as much. That is, yeah. I mean, actually, that is a fair counterpoint. I didn't think about that. I'm now looking to buy the Nikkei, not. I'm looking to buy the Nikkei, not yet though. Okay, fair enough, Roy Beast. Watch oil at these levels, guys. If we break higher, yeah. Okay, let's take a quick look at oil, then we'll get back to what the list was, which was New Zealand dollar and pound yen. So yeah, oil is actually doing very well on the day. As I said last time, it wouldn't surprise me if we get this gap fill. So I would say minimum sort of target for oil would be around $90 for me on a short term, you know, sort of over the rest of today, maybe Monday, depends on how volatile it is. But I would expect oil to at least be back at 90. And then from there, if we don't get de-escalations, my point still stands that I've been talking about over the past week or so, that I really do think oil can surpass 100, 110 and possibly head its way back up to 120, maybe 130. It really depends. Again, it's very difficult to say because we could get a counter headline that completely destroys that idea over the weekend. But yeah, we can't really do much other than just wait and see. So do I, James. Never care about sessions. Yeah, sessions I would say are very useful, especially if you're trading something like Nasdaq or the Dow and you're trying to get a swing position in there. Then yes, sessions are quite impactful because the entry on there could be quite meaningful. Also, the price movement on this session on New York can be quite meaningful. So that could matter a bit more. But I'm not going to wait for that to enter something like euro dollar. You know what I mean? My friend is up over 200 million pounds with under 100 trades over 15 years. You don't need to day trade. That is fantastic. Can I have a little M, just a small one, please? James, so yesterday's seasonality model found some edge after back testing. Stress, okay, really nice. Okay, right. I need to get to the charts because I keep getting distracted. So let's do New Zealand dollar. We'll move into pound yen, and then I'll check the chart again. So what are we looking at here? Edge Finder. First of all, New Zealand US dollar is very bullish, along with the other dollar pairs. We've got pound dollar, New Zealand US dollar, euro dollar, and the Australian US dollar. So if we're paying attention to just Edge Finder, we do want to lean towards the long side, very simply speaking. From a technical point of view, though, it's actually very similar to pound dollar in terms of where kind of just at a bit of an inflection point. So we've got these previous lows now acting as a new resistance in this market. We've got the daily moving averages that are technically bearish because the 200 is above the 50. However, they are also parallel. So there's not really a direction here for me to trade off at the moment. But if we look at the H4, it looks a little bit different. The H4 looks slightly more positive to be a buyer. We are in a bullish trend here. We have had a move to the upside. So we could look for something like this. Now, this isn't my ideal sort of idea. Again, we are kind of buying into quite a strong resistance. We're buying into a flat daily trend. So not perfect, but the idea is there, the edge finder's there. So I think it might be worth it if this aligns with, you know, whatever you were looking at previously anyway. So yeah, I like it, but I would rather wait for a little bit more of a decisive move on the daily, establish a bullish trend, or at least a bit more of a bullish sign. And then, yeah, maybe it would be worth taking an attempt on my side. So next up, pound yen. Oh yeah, I got slaughtered on pound yen. Oh, nasty position. It was one of those things that we entered and it went straight into drawdown. Fine, no problem. Then it came up into profit. It's okay, cool. Still on the edge finder, bullish. We're all good. And then very quickly, stop losses smashed. So that was a fun trade to be stuck in. Anyway, yeah. So pound yen is still, I would say, quite a good buy. So the reason is because the carry trade is still intact. The dynamic is still there. The only real thing that has dropped pound yen was the intervention. So I would have no problem actually just being a buyer at some point. I don't know if now would be really the best time if we're being pedantic. I think generally speaking, it would be okay with a stop loss just around the 200 daily moving average. But yeah, overall, I'd say it's okay. We might be able to see a little bit of a lower price. And the reason I'm saying that is just because I'm looking at the previous downsides on the pound yen. We don't just have these V-shaped corrections. We actually seem to consolidate a little bit before continuing higher. So we might have a bit of a consolidation period here before this upside. So that would be, in my opinion, on pound yen. We do also have pound yen still very bullish on the edge finder with a score of 7. So it definitely could be worth an attempt. I'm not sure I'd want to get involved just yet. I'd rather wait for something to happen. I'm not sure what that would be yet. I think I'd rather just let this market do what it wants to do for now. James selling Australian US dollar across the board, the only safety now. Yeah, I do quite like the idea of being short, especially Australian dollar against the New Zealand dollar. I really do like this idea. The Australian dollar against the US dollar could also be quite a good one. But for this one, we'd need to see a bit more of a confirmation on a bullish US dollar, or at least I would anyway. Mohammed, hi James, hello to you as well. Hope you're good. I literally have the same, exact same view on oil. James, have some longs going from 78 risk free. Very nice. Good job. Great job you guys are doing. Well done. Thank you very much, Sykes. Lol, you had been short from 119. What do you mean, Mega? I think the market is going to reach 70,000 from now, and then we'll further see 70,000. Which market? Do you mean Bitcoin? James, also my model got stopped out on pound yen. Black swans are hard to model again. Yeah, that's the thing, Ray Beast. It's one of those things we can pay attention to. The intervention risk has been there. It's been that, I've been talking about the risk of an intervention for probably the past 2 months. And that whole 2 months, all we've had is upside. And as soon as I get into a position, we get the intervention. And I'm always, well, I haven't told you recently, but I think a few weeks ago, I was telling you, the yen just doesn't work for me. It's like, I don't know, it's just something that happens with the yen. Whenever I take a trade, it just doesn't work. And this was just, again, another layer of evidence that maybe me and the yen are just not friends. It's just typical. It's like I stay away for 2 months, just waiting for an intervention. I finally get in, and the next day we get it. It's just typical. But there you go. That is the way of the world. You had to realize that BOJ has to do something. The maths say so. Well, you say this, but the BOJ is in a very difficult position. It's not just a case of they got low rates and they need to hike, because they've also got to manage the bond market. So the BOJ really has two different jobs, and they cannot do both. So they've got to manage the bond market, but they've also got to manage rates. And they tried to do both at the same time when they did the was it a 25 basis point hike, or so they did a small rate hike. I can't remember off the top of my head what it was, but it was a small hike. With limited forward guidance in terms of, they're going to hike again. There was no real path to normalization. So they got the worst of both worlds in that situation, because the currency continued to fall and bonds still weren't happy with that. So it's not quite as simple as just saying the BOJ has to hike, the math says so. I understand why you say that, but the nuance, or the nuance there is, they can't really, or they can, but they've got to do it very carefully. It's not like the BOJ can come out in the next meeting, hike rates, and say, we're going to start this path to normalization. We're hiking to 3%. It just wouldn't work, really. Maybe we could get some content prepared for that tomorrow. Maybe I'll gather some stuff so I can actually explain that properly, because I do only have 10 minutes left, so I don't want to spend 10 minutes yapping about the same thing. I made millions on the yen. Very good. I'm sure. Well, they can type everything you're saying. Oh, can't type everything you're saying, but yes, they're in checkmate. Yeah, exactly. Do you think replacing Fibonacci with volume profile is a good idea? I don't know. I don't use volume profile. I've never really understood its use case. I know obviously you can see where the most volume is at the moment, but no, I don't really. No, not at all. Yeah, I don't know. The fib is just one of those. The way I really learned swing trading was with the fib, with moving averages and an RSI, and I've just not changed it. I've made tweaks here and there, but overall it stayed the same at the core of it. So no, never considered swapping anything out. This month I've asked you maybe 50 questions on stream. You answered everything with time and effort. Critics should understand the stream gives about the value of an expensive mentorship. So good, Christoph. That's what I'm here for. And as I said, I think, was it yesterday or the day before, sometime earlier this week, if you didn't ask questions and you didn't talk in the chat, this would be a very difficult hour to get through every day. So trust me, I've got absolutely no problem with people asking questions, whether it's a complex one or it's a really simple one. Sometimes I might give you a bit of a sarcastic answer if it is a bit of a stupid question. But generally speaking, there are no stupid questions. Oh, well, for the most part, there's no stupid questions. Okay, what else have we got going here? Also, you have to have been crushed by swaps carrying that short for so long. Oh, right, you're talking to Mega. Okay, right. So thanks, I really appreciate your answer. Yeah, no problem. Okay, so yeah, this gold long is definitely not playing out at the moment. So I think this is just going to have to be a very quick cut the position idea. Euro dollar is doing quite well though, so that's picking up a bit of the slack. Nazi is just completely flat. I would imagine it's going to be flat really until the NYSE. The Nikkei seems to be doing okay. We failed to hold above this 200 moving average on the H. Oh wait, hold on, I need the H4, not the H1. So yeah, I mean the H1 was still relevant, but the H4 here, we are still in a downtrend. Didn't get stopped out, which was nice. So overall, I'd say it's still a pretty decent position. EuroCAD, it doesn't really matter. It's a risk-free trade, so it's all good. But overall, it does look like we might be flipping bullish here. So we could see a bit of a correction, a bit lower, make some sort of 50% retracement, and then, yeah, again, have that correction to continue higher, or the continuation to move higher. So we could see something like this, where we revisit these previous highs on the left. Again, that would just be the break, retest into the fib, and continuation, also allowing these moving averages to begin crossing over on the H4. We'll see. Doesn't really matter, again, because it's a risk-free trade. So whether it's stopped, it's all good. Am I the only person on the internet who thinks oil is going lower? No, Rusty. If people didn't have contrarian ideas or different ideas to each other, the markets just wouldn't move. So you're definitely not the only person. James, can I ask, those arrows, are they from an indicator? No, I plot them. I went through this morning. I woke up at about 5 a.m. and I was too tired to really do anything. When you wake up and you're a bit groggy, I couldn't get back to sleep. So I was like, you know what? Rather than sitting trying to find some trades, I'm gonna redo my charts a little bit. I've not restyled my charts in a long time, so I thought it was time for a bit of a refresh. Usually when everyone has baked in 150 oil, which we surprised if it drops to 60 and everyone loses money, it absolutely could happen. Yeah, it absolutely could happen. But the thing is, at the moment, I don't see what would warrant oil dropping. I don't think there's really anything. So the only situation I can see oil dropping to 60 is on a ceasefire and peace agreement, which doesn't seem likely at the moment. Could happen over the weekend again. We could get anything over the next 24 hours, 48 hours, 7 days, so on and so on. But as things stand right now, I really don't see a reason for oil to be bearish. Okay. Do you think the UK 100 will continue to be bullish? Yeah, the UK 100, I forgot to look at this, but it was or is on my watch list actually. So let me just double check. I'm fairly sure it's bullish on the Edge Finder. It was. Yeah, so UK 100 or the FTSE is getting a very bullish reading with a score of 7. So yeah, we want to look towards being buyers. Very simply, in fact, actually, it's probably one of the cleanest setups I've got going at the moment. So we've got the previous highs that have been completely broken out of. So I'm looking again for that retest of these highs, pull into the fib zone, maybe towards the 200 moving average here, and then look to get long on this pullback and continuation. So that's really all there is. That's really all there is behind this trade idea at the moment. The Edge Finder is bullish. The technicals are, I want to say perfect, because, you know, the way I trade this is kind of the perfect setup. It's so simple and bread and butter. Yeah, couldn't really get any better in terms of, you know, bullish trend, previous highs broken, pullback, retest, continuation, super basic. That's what confused me. I was watching the pair you were referring to. Oh, okay. Meggy, you were short at 219 on pound yen. Fantastic stuff. Good catch. Dollar CAD. Excuse me. So dollar CAD is it's definitely an interesting one. So what we've been paying attention to, or what we were looking at on dollar CAD previously, was how this market reacts to escalations and de-escalations in the Middle East, because both currencies theoretically do react well or gain a bid from escalations. You know, the US dollar gets its war premium, higher yields, the US dollar does well, but the Canadian dollar also does well on higher oil. So what we saw is that actually during the escalation periods, dollar CAD outperforms, but during de-escalations, dollar CAD comes down. And now we're kind of flat. There's not really a direction at the moment here. So it's something to keep in mind, but I don't think it's a huge deal at the moment. But again, something to think about. Dollar CAD is getting a bearish read on the Edge Finder. However, it's only a score of 4. So it's definitely not a strong score that I'd really be interested in. So I would say this really comes down to, what do you think is going to happen? Do you think we are going to see more escalations over the weekend or not? Now, the daily is something that I do like, which is the previous highs. So I was looking to go short around here. Some of you will remember, you know, we had the fib from the high to the low. The reason I didn't take it is because we'd be selling straight into this level of previous resistance. Excuse me. And the R&R just wasn't worth it. I didn't like the idea really. So I'd like to actually see a little bit of a move to the downside, retesting this these previous highs of support, pull into the 200, and then a continuation higher. Now, of course, the downside to that is the Edge Finder doesn't have a bullish score, and there is no fib lineup here. So I think the idea is there, but I don't think there's just not enough for me to actually do anything here. So yeah, hopefully you get what I'm trying to say here. I think the technicals say buy, fundamentals say sell. So yeah, a little bit of a mixed bag for me. I've got 2 minutes left. One Trump tweet that Iran was paused. Yes, that's exactly it. We could get a post over the weekend that completely flips the oil market. But again, we don't know if that's going to happen or not. So from my point of view, the best we can do is the best we can do. So that's basically trading what is happening right now and what do we expect to happen. I wouldn't be shocked really if we do get some sort of de-escalation over the weekend, but I'm not convinced it would last. And that's just based on history. I mean, we can look at oil to show that exact thing. So do you remember when we were just ping-ponging up and down during this period? You know, we had escalation, de-escalation, escalation, de-escalation, and then it just continued like that for weeks. And then we come down, and then we have another escalation, and it's just an absolute mess. So hopefully you see what I'm saying when it's a case of we could get the headline or we could not. And if we do, is it actually meaningful and is it going to follow through? So that's what I mean by we can just do our best. Trump doesn't care if it looks horrible or not. More like it enriches the pockets. Yeah, I mean, there's definitely some insider trading going on. I don't think there's any question of that. But we see everyone's talking about midterms and Trump not allowing higher oil prices. The thing is, Trump doesn't really have much of a say because, yeah, he could call for a peace deal, but then is Iran going to agree to that? But then also, again, is it going to follow through? So it could be a case of what we've already seen where oil starts coming higher, we get some sort of peace agreement, and then actually coincidentally oil comes lower and then it re-escalates. Same thing here. Oh, oil normalized, we got lower CPI. Oh, and then it just so happens to escalate again. So again, we'll see, but I'm not overly bothered either way, to be honest. Can take a look at German 40. I don't have time to do that, Lenny. We do have Alan coming on after me, so I'm sure Alan will take some time and have a look at some more charts with you. Let me just take a quick scan of what's been said, and then I'll head off. Iran have said they haven't even spoken with the US in weeks, only interested in talking with Oman. Yeah, the thing I saw was that Iran actually don't have an interest in a peace deal or any de-escalations. There are, again, last sort of real thing I heard regarding that type of topic was that actually Iran wanted revenge. But again, we'll just see what happens. I think Iran does actually have the upper hand here in terms of the US has the, let's say, the military capabilities to quote unquote win, if you will, I think. However, Iran have the upper hand in terms of the financial war that they can start with oil and the Strait of Hormuz. I don't think the US could really do anything about that, to be honest. I still have this question. Is it in Iran's interest for Trump to have a peace deal? Exactly. Yeah, exactly. Okay, right. Ladies and gentlemen, that wraps up my segment today. Thank you for being here. Don't go anywhere. We have Alan Perez coming to take over the stream. Alan's a fantastic trader. You're in great hands with him. Guys, stay safe. Don't get margin called. I'll see you all on Monday. Enjoy your weekends. And yeah, see you later.
Today's video is sponsored by 8cap, and did you know you can actually get a free copy of Edge Finder with the help of 8cap? The way this works, basically, if you create an account under our referral link, which I'll have linked in the description down below this video, you can actually get a free copy because they purchase it on your behalf. Now, how this works is basically if you follow the link that you'll see on the screen right now, basically scroll down to where you can see all of the different offers that we have, where if you deposit a certain amount of money into a new 8cap account, they will effectively buy our products on your behalf so that they're free to you, you get them free, and you also start trading with 8cap. Please also make sure to do your own due diligence on 8cap to make sure that is a brokerage that meets your own risk criteria. All the information, like I said, can be found in the description down below about this specific sign-up offer. Thanks to 8cap for sponsoring today's content. Now back to the video.
Good morning, everyone. Good evening or good afternoon, wherever you guys are at today. Guys, go ahead and check out 8cap if you are looking to go ahead and change your relationship with your broker. They're very good, and you can get 2 birds, 1 stone with that. Get the Edge Finder, get a good broker, check it out if you are in the market for one. The link is right there in the chat. But good morning to everyone. Hello, Simo. Hello, Carlos. Hello, KDX. Ball out. Good to see you, man. Okay, let's get started. We had a pretty big week today. This week. Let's see. I saw something just come through here. I think it was Fed speak. Yeah, I'm not confident that inflation would ease absent action from the Fed. To manage against the risk of inflation becoming entrenched, would prefer to tighten policy incrementally. Interesting, very hawkish. If inflation remains elevated, a potential series of small policy moves would be better than waiting and concluding that bolder actions were necessary. Guys, that's pretty hawkish. That's pretty hawkish. Let me see. CME Fed Watch, if it's moving any. We'll look at 2-year yield as well. And then what is the dollar doing? So the dollar is continuing. It's a little bit of a bid up here. I'll go over that here in just a second too. Yields today up 2-year, 10 years green, 2 years green. We have, so this is some pretty hawkish commentary. I'm curious to see if you're going to have a continuation, a big move. Like if you guys remember Fed Waller, when he was very, very hawkish, that really moved the market. So I'm curious to see if this one would also move the market. But for now, we'll keep an eye on it. But yeah, this is pretty hawkish, like especially this right here. This is what I'm kind of looking at here. If inflation remains elevated, a potential series of small policy moves would be better than waiting and concluding that bolder actions were necessary. Maybe they kind of fear of a too late wars type of situation, right? So We'll see. How much did the tool cost? The financial juice is completely free. This is where I get my news from. And the Edge Finder, well, you can check the Edge Finder out at put the link right here, www.a1trading.com/edge finder. Go ahead and check that puppy out in the chat there, dear, to go ahead and see. But there is a 40% off, 45% off sale right now. So definitely take advantage while that lasts. I promise that it will be worthwhile. And what the tool does, for those that are new to the stream or anything, this basically gathers all of the economic data, sentiment data, technical data. It compiles it all together and gives you a score, bullish or bearish. So when you're trading macro, when you're trading all of this stuff, right, all of the stuff that moves the market, it's really hard to stay up to date with it because things are constantly happening. Like, for example, last night I was out to dinner and BOJ was happening, right? So instead of like looking at my phone and whatever, monitoring the situation, the Edge Finder captures that data, computes it into the algorithm, and tells me bullish or bearish, right? So it gathers a lot of different things: GDP, PMIs, retail sales, inflation data, labor data, sentiment, latest buys and sells. All of it is very complex. It scores it all together and it gives you a fantastic reading. And use code Allen. Yeah, thank you, Nick, for that. So let's go ahead and look at the Edge Finder, right, as we're looking at it. So we had something changed yesterday, which is USD bearish. You saw USD CAD bearish as well. Following that, USD CHF with that as well. And you're starting to see a continuation of these bullish pairs like pound dollar, pound Kiwi, euro dollar, Aussie dollar. So that's pretty. You can look at the chart on dollar and say, yeah, it makes a lot of sense, right? So this is kind of what I'm looking at here. DXY, we'll go top down here. Let me get the epic pin pulled up for you guys. So DXY, right? We have this level of resistance, right? 1, 2, 3, 4, 5, 6, 7 times. And then, eventually, as we had this upward trend here, as the war in the Middle East was escalating, you had safe haven dollar getting bid up, you had inflation fears getting priced in. All of that stuff was bullish catalyst for the US dollar. We finally broke out of this 100.5 level and it continued higher. Now we met the next resistance zone, which was 102. Now that seems to have been a pretty strong level because price rejected it here just recently. And for the first time of the war happening, you actually had DXY break this upward trend line here, right, to the downside, and had some pretty strong continuation to the downside. And then if we zoom in just slightly here, you have this level, which is that previous level of resistance, that 105, now potentially being resistance once more. So we have price trading back into this level here. Me personally, there's 2 obstacles that you have to overcome when it comes to the bear side. So the first one was achieved yesterday, this upward trend line here with DXY. We broke out of that. We had a strong close. The second candle was another strong close. So that one is check mark out the way. The second one that we need is to see an actual break, retest, and hold of this level 100.5. This level right here could turn resistance. If it does, then I do think that the path of least resistance for now is to the downside for DXY, and maybe targeting something like 99.2 or 99.4 where this 200-day moving average is hanging out at. So that's kind of what I'm looking for DXY. Not to mention, besides the technicals, if you go to we'll go to asset scorecard, we'll go to US dollar here. For the first time in a very long time since the war started, you're starting to see some bearish US fundamentals, right? So we're having this bearish score here on US dollar. The reason being is, well, one, we already discussed this, that the technicals are now pointing bearish on the 4-hour and daily chart trend and on the seasonality front as well, which is very interesting to note. Also, economic growth here, bearish, right? So GDPs yesterday came in bearish. You also had some misses in manufacturing, services, retail sales is kind of neutral. Consumer confidence came in bearish. So that's obviously a bearish outlook there for the economic growth side of things. And then on the inflation front, right, we do have, if we reflect, PCE came in slightly cooler, PPI came in cooler, CPI came in cooler, which is actually bearish for the dollar. So less inflation, bearish for the dollar. More inflation means rate hikes, bullish for the dollar, right? So you had bearish inflation, bearish economic growth, bearish technicals. And then the only one that would really just kind of propel this even further would be the jobs market data, right? So we had the latest NFP report came in weaker than expected, right? So that was bearish there. If you continue to see another round of weakening jobs data via the NFP report, then I think that DXY to the downside continues for some time there. So the outlook for USD starting to change up a little bit. And so that's why I think that if this level does hold 100.4, 100.5, I can continue to take this to the downside, right? So the question then becomes, if that's my outlook, if that's what I'm prepared for, how am I going to trade that? So I have a couple things, right? So I have actually euro dollar to the long side here. In fact, this is the position, but for transparency purposes, let me show you the actual position that I have. This is on my FTMO account, and then I have the same exact position on my live account. So I executed it yesterday live. So it's down about $83 here. So it was in profit, then pulled all the way back. Which is perfectly fine. You're going to let the trade breathe and stuff like that. But on the 4-hour chart, I saw this breakout here on euro dollar happening. And then shortly thereafter, you did have that Bank of Japan intervention. But for euro dollar here, this was a level of resistance that I was kind of watching here on the 4-hour. We saw a breakout. So we got the breakout, and now we're getting the retest here. So if this level does hold and continue, then this is a pretty solid break, good old break retest continuation to the upside play. And then from a technical perspective, where I'm looking to take profit at would be, if I go back to the daily time frame, this level of resistance that is around 1.165, you can call it 1.162, where this 200-day moving averages. That's where I would see resistance, where buyer or sellers could have an opportunity to step in and take this lower. And at that point, we could probably just be range bound here. That's kind of what I'm looking to capture here. So you have this top of the range, this bottom end of the range. Currencies are mean reverting, so it's not like I'm shooting for the stars and trying to capture this big runner. I'm just trying to buy near the bottom end of the range on a good technical breakout with fundamentals in line with myself, and then just trying to capture the top end of the range, take profits, repivot, and et cetera, et cetera. So that's one of the positions that I'm looking to do. I'm actually curious for pound dollar as well. Pound dollar had a lot of momentum here. However, I would need a deeper pullback into at least a 38.2% retracement level. I actually really like that to the upside potential. So I'm going to keep that in mind, but I'm perfectly okay with just holding my euro dollar long position and not adding to pound. If I get the pound dollar pullback, perfectly fine. I'll take it. But if not, I'm also not going to beat myself up with it as well. Another one worth looking at is Aussie dollar, though I kind of don't like this one over euro dollar because they did have some cooling inflation recently. So not the very best. I prefer euro dollar. And also, too, euro dollar just makes up the majority of that DXY basket. So if you look at this euro dollar chart and then you look at the DXY chart, it is essentially the exact same thing, just inverse. So this is my way of playing the DXY. Okay, let's see here. Let's look at the chat because it's moving here. Ball Out says Edge Finder is the best creative thing in mankind. It is, man. Like it's like it's really effective, and it actually doesn't have a lot of like fluff, a lot of fat to it. You know, like there's some terminals that have like too much stuff going on. Like for example, Bloomberg terminal, right, has a whole marketplace, like a whole eBay. Like, is that really necessary? Like, I feel like Edge Finder has just the right amount of things, what's relevant, what's needed, and just that, right? So that's why I like it. So definitely go ahead and get yourself a copy of the Edge Finder. Cheryl's agrees with that as well. Edge Finder, the hedge finder, Ball Out. That's funny. You guys are funny. How about we talk about gold? Yeah, let's talk about gold here in a little bit. We'll talk about Bitcoin too as well. Ball, it says keeping an eye on S&P 500. If it continues holding to the upside, the new all-time high. If it breaks down, then off it goes to 73.20. Let's look at S&P. So we had a pretty volatile week for equities, I would say. So you had the Fed meeting, the press conference here, which was back and forth. You had a little bit of a Fed put being priced in with a 30-year yield rising, basically pricing in a little bit of a lack of confidence in the Fed, right? Like, are they really going to hike rates if they need to, or is he just like a continuing with what he was basically elected to do by the administration, some say, to just be dovish, right? So you had that going for it. So you had Nasdaq kind of drop off here, but then you had a little bit of a rebound yesterday, and we'll see if that continues today. I'm curious, actually, right here, you have a level of, this was support here once, twice, 3 times, now potential resistance as well. So to Ball Out's point, we are at a very key level here. If you get the break above, then, this is resilient. This is the dip. You continue higher on any pullbacks and yada, yada, yada. But if this level holds, then this could be the break, retest, failure to hold, bears take over, and continue lower. So you're kind of at a pivotal level for equities. For the S&P 500, kind of not seeing the same thing. I feel like we just kind of bounced off of some support right here. The S&P too has been just the benefactor of the broadening rotation, right? So you have a lot of like AI fears. You have like the Cosby. I wonder what that's doing, but you have like a lot of AI outflows happening right now. Interesting. Cosby just touched a 200-day moving average yesterday, and it's rebounding quite nicely there as well. So we'll see if that continues. But you have a lot of AI fears, a lot of capex fears, a lot of rotationing happening. So you have like these volatile Nasdaqs here, and then the S&P is just benefiting from that. So this seems to be like a good level, that 7,300 right here for any pullbacks, right? So if you were to get a pullback here, depending on the overall market conditions, this might be wise to take another stab to the long side. Gold. Let's talk about gold here. Let's see. Before we talk about gold, let's talk about inflation, oil, all that good stuff. So oil is very impactful for not only gold, but for the dollar, everything like that. Higher oil prices means higher inflation fears. Higher inflation fears means a more restrictive central bank. A more restrictive central bank means stronger dollar, weaker gold. So right now, as of now, oil is similar to like the Nasdaq at a very pivotal level, right? This was support one time here, support when the war was going on. Then you have a breakout lower in June that translated into lower CPI, lower PPI, and now you're seeing prices kind of come back up again. Again, similar to the Nasdaq, right? If this level holds, then this is a break, retest, and continuation lower. That's good for the inflation story, and that is good for gold, right? So if you see a breakout higher, a hold higher, and continuation higher, that's going to be bad for gold, right? That is inflation fear stepping back into the picture. Maybe you get a bid back into the dollar. But this level right here, 85, is super, super important for me personally. This is my line in the sand, because from here on out, you can go either direction. And then you also have this level of resistance here as well to be mindful of, which if it can, price keeps kind of stalling out here, it'll line up pretty well. And then it'll be kind of a breakout of two technical scenarios, right? It'll be a breakout of the trend line to the upside, or it can hold and continue to the downside. So that's kind of my thought process on oil. Now for gold, chopping around. Let me show you my gold position. Same thing like the euro dollar position, pretty flat, right? $100 something, right? So it's kind of hanging out there. Again, it really needs to see a couple things. It will need to see lower oil prices. It benefited yesterday from that weak dollar. So if we could continue to see that weakening dollar, then this would also continue to benefit here. But it's kind of range bound. So the first level that I'm targeting here, that first obstacle, is that 4,200 level of resistance here. If we overcome this level, break, retest, and continuation higher, then I would trail my stop right here. And then we would need to see if we target that 200-day moving average. That would be the next obstacle for gold. And then if you overcome that 200-day moving average, I will then wait for a break, retest, continuation higher, and then trail my stop behind that one as well. But there's a very strong probability that if nothing happens, if things stay wonky, if you have mixed fundamentals, oil prices is swinging like the way it is right now, there's a probability that gold just stays in this range here and chops sideways. In that case, if nothing improves and you fail to get a breakout right here, let's say maybe you have maybe two opportunities or one opportunity and it just doesn't hold right, then maybe I just take my profits at 4,200 if we even get there, and then call it a day, and then wait for a better, more obvious kind of landscape to go ahead and long gold. But right now, it seems like things are starting to shift. You have the dollar softening up a little bit. You had yesterday, you had the 2-year yield softening up a little bit. You have oil here, was red yesterday, but we'll see what happens here. But again, a lot of markets here are just lining up at these key levels, and it could really go either way. So I know that's the boring answer, but it's good to know what happens in either direction, right? So like if oil pops higher, you'll probably want to be buying dollar and staying away from gold longs. And if it pops lower, if oil pops lower, then the dollar softening story continues. Maybe you hold your gold position, right? It's good to know either scenario. Under symbol, there's 0. It says bullish. What's that? I don't know. I actually saw that too. Maybe Nick can answer that question for us if he's watching here. There's a score 0 here, bullish. Don't know what it is. Let's see the chat here. Euro USD range like a mofo, waste of time. Listen, man, if it's in a range, like this is how I view kind of currencies, right? Like For example, with a currency pair or Forex in general, my expectation is not to catch a trending runner. But if you know that something is in a range and they mean revert, and price finds itself at the bottom end of the range, then I would love to trade the range to the other zone, take profit, and then maybe look to do this again, take profit, and then look to do this again, and then take profit. Now, easier said than done, because when the level hits that level, you also need to have fundamentals lined up, sentiment lined up, et cetera, et cetera. But I think it's if you want to maximize, right, then you can look for these opportunities, and when it presents itself, you can execute on it. So I do agree, though, with ball out that currencies are not the most fun to trade, right? But it is very, I would say, a lot more predictable. Like, for example, if you are trading euro dollar here and you are like myself, where you are open to taking a position here and your stops are 100 pips, 150 pips wide, then you can just absorb and we'll let this thing fizzle out, play out, and then eventually you'll be correct. And then depending on the direction that you're going, you can get some positive swaps, right? For example, if you were short euro dollar, I was short euro dollar, but then I took my profits pretty early, so shot myself in the foot there. But for example, if you were to short euro dollar anywhere within this level, let's say here or here or here or here, doesn't matter. I'm not like the most precise person on my entries, but if you have a wide stop and you have positive swap in your direction, then there's a potential for you to absorb and capture some of this move, however long it takes. And the more long that it takes, the longer it takes, the better, because you're getting positive swaps. And then you take your profit, repivot, reevaluate, and then see what happens. So that's kind of my thought process on that. So yeah, there's and then you have the opportunity to catch other trades, like for example on a metal chart or an equity chart, where they do tend to trend, and then you can catch these bigger moves. And then also too, currencies are quite fun when they start to heat up, right? Bank of Japan, very, very interesting, that I'm looking for, right? So this to me is the trade that I'm waiting for. This will be, if I get it, one of my you like every trader gets a handful of good picks every year, right? Like one or two that can really make up some PNL. If I can get myself a meaningful dip on UJ, right? Like if we overcome this 200-day moving average, break it to the downside, maybe you get 155 or 153, 152, somewhere within this area, and you can catch a meaningful dip on USD JPY, and then catch another kind of like slow drift higher like this one was, plus positive swap. That would be a really, really good trade for me, something that I'm really waiting for. And then you can just like build positions, increase your size along the way responsibly. If you get some pullbacks on structure and it holds, things like that, that is something that I'm looking to do on USD JPY. Speaking of USD JPY and Bank of Japan, they had their central bank meeting yesterday. Pretty hawkish, I would say. They're very mindful of the situation, and they're willing to hike interest rates if the data and the situations allow. So I saw that. And I also thought I saw a 3 a.m. candle, 3 a.m. Central Time candle of some kind of an intervention or whatever, because this right here, 3 a.m., there was nothing going on in Japan. The meeting was like somewhere over here. So this was a big candle here, got pretty close to that low of the day yesterday. So I'm curious to see if that was another little hint of intervention. Who knows? But let's look at this chart here. So USD JPY, this level here, 160, was Japan's no tolerance zone. 160, they said we're going to defend it, we're going to intervene if it gets there. So traders were kind of selling into it. And then right here, you had it, Bank of Japan actually intervene into it. We brought it lower, and then it drifted higher, broke through the level, continued higher. And then yesterday, it seemed like they had enough and they intervened, right? So we brought it lower. We're now below 160. We traded lower. Now we're getting a pullback into 160. And so similar to kind of like the oil chart or the Nasdaq chart, this is the opportunity for bears to kind of step in here and take it lower if it wants to go lower. And if it doesn't, and it just breaks above here, then you have a continued risk of this happening once again. What's different this time is that you actually have weakening fundamentals in play. So right here, during this intervention, you had pretty strong U.S. fundamentals, and you also had the kind of war in the Middle East still top of mind, still very hot. And so that allowed this chart to go ahead and just revert and basically discard the whole intervention and continue higher. This time around, we still have the Middle East stuff happening, but then you also have a little bit of weakening US fundamentals. So that could actually be a scenario where Bank of Japan has a pretty good pocket, a good window to go ahead and intervene and bring it lower if need be. And then obviously if the fundamental story in the US continues to deteriorate, then even better. Then you're getting not only just a quick fix of an intervention, like an artificial fix, but you're actually starting to see some structural changes that would help support this and keep this level lower on USD JPY. So that's what I'm looking for on that one. So very, very nuanced, but to make it very, very simple, basically I'm a dip buyer at 155, 153, 154. I can start to build a position here, try to capture a kind of drift higher there, and then I would look to kind of take profits once we get back to 160 or something like this, or a good level of resistance, build a position, get it big, and also just capture some positive swap. So that is what I'm looking for on USD JPY. Let's see. Risk management is the name of the game, ladies and gentlemen. Absolutely. It is like the only variable that you can control. Besides from your like take profit level and your stop loss level, the only thing that you can control in trading is your risk size, right? Like you can't control if Bank of Japan comes out at the gate on a random Thursday morning in New York session and dumps USD JPY. You cannot expect that, but you can expect, or you can anticipate your risk size and the swing and accept the stop loss before you place the trade. Like you shouldn't place the trade and then start doing your stop loss and all that. Like that's not how you go about it. Like you should have all of that predetermined, accept it mentally, and then if it happens, it happens. You still holding your USD CHF short? Nah, man, I got stopped out of that puppy right here. But you know what? If you do see some continued dollar weakness, maybe I can re-enter similar to USD JPY, right? We had a breakout. We are now retesting into this level here. I'd like to really see if sellers can step in and take it lower. What I like about this chart though is this. So if we zoom out here, this is a very similar to that euro dollar example here. This is a very choppy currency chart. Resistance right here, big time. 1, 2, 3, 4, 5, 6, 7, 8, 9, potentially 10 here, right? 10 times where this level held as resistance. You can see here that this thing loves to chop around. So if I see price at the top end of the range, and there's a possibility that we can hit 0.8 or 0.79 or even 0.78, I would love to short this thing and take it lower. With this one, though, I have to be more strategic and kind of time it more efficiently because you do have negative swaps there. So unless my time horizon is like a couple, like 4 weeks to months, then the swaps really, eat up into the trade. But if not, then this could be a kind of attempt to go ahead and take it lower, and we can target the 200-day moving average at 0.79. But similar to a lot of these pairs, like for example, UJ, right, at a very important level, DXY, very important level. I want to see this hold before I enter into any other trades with USD exposure. So if this level does hold on DXY and you do see sellers kind of step in, then I would love to hop into USD CHF short. It is a really good opportunity in my personal opinion. And also the edge finder is giving us a bearish reading. So I love to see that. So definitely on top of mind for me. But for now, I have euro dollar long and gold long. Let's see. We need that break on gold. Yes. We need break of 4,200. That's what I'm looking at. I think gold is just pulling back to bullish next week, in your opinion. I hope so. From a selfish perspective, I hope so. But we'll see. It's definitely chopping around, though. It's definitely chopping around. But again, I like the idea. I like from a long-term perspective too, like just assuming that this is the bottom or this is some sort of the bottom, you're getting a pretty good discount, right? So my first level here, I would be very happy with this. I would be very happy if you overcome 4,200 and I just get the 200-day moving average right here. Because at this point too, like if the longer term trend or outlook is like flat to bearish, at least we get the 200-day moving average. You have the longer term picture confirming that when you tap into that. And then from there, I'll just take profits and just go from there. Silver is a sleeper for sure. You know what? I actually don't like silver. Maybe that's not a hot maybe that's a hot take, but I just don't like silver, honestly. If I'm just looking at history here, I think that the forward-looking returns for silver, not the best. You had the 80s, and then you had 2011, 2010, where you had like these monster pops in silver, and then the forward-looking returns are just ugh. You see that? Ugh. Not to say that it's going to happen every single time, right? You never know. Like the macro landscape could shift dramatically, and maybe you see a better outlook for silver. But I just feel like it's not the best. Me personally, I would rather gold. And again, maybe I'm just being naive. I'm being dumb, and I don't know something. But I just don't like silver for now. Always use a position calculator, boys, unless you're a crazy math guy. Always use a position calculator. In fact, let me pull it up for you guys before I head out, guys, because I do have to run. We go to Edge Finder or A1Trading.com. Tools. You have a Forex risk position calculator. You have CFDs. You have futures. You have prop firm drawdown calculator. So just go to A1Trading.com. Tools. Right here, risk calculators, and you have a bunch of them for you. So definitely take advantage, and they are completely free as well. Completely free. Look at that. You can see your currency pair, the balance, how much you want to risk, your stop loss, all that stuff. It tells you how to do it right there. But I'm going to go ahead and pivot out here. I'm going to transfer the show over to Nick and Chris. You guys are in great hands, and I will see you guys shortly once again in about 30 minutes or an hour. So goodbye, everyone.
Don't go anywhere, traders. We'll be right back to the show. But real quick, I wanted to tell you about today's live stream sponsor, Prop Shop Trader. If you're a futures or equities trader, let's talk a little bit about what Prop Shop Trader has to offer. So first and foremost, if you're a stock trader, there's not a lot of firms out there offering stocks. So this creates a unique opportunity for stock traders to get in on the prop firm action. Prop Shop Trader offers a variety of various different account types for both swing and day traders looking to trade futures, whether that be gold or Nasdaq or ES or YM, whatever you trade there, or on the equities side. They also have a very scalable environment where you can actually trade up to 20 accounts within the same prop firm. A lot of traders nowadays are trading with lots of different prop firms, but Prop Shop Trader wants to make it more accessible and stackable to build your relationship with a single prop. With competitive pricing and transparent rules, Prop Shop Trader stands out as a solid option to consider for those of you who are trading futures or equities. If you're interested in exploring Prop Shop Trader for yourself to see if the accounts are a good fit for your trading style, then make sure to use our promo code A1 Trading to get a really substantial discount at checkout. Our code will get you the best available prices right now. As always, I want to disclaim that prop firms are a great way to scale up your trading capital if you have the skills. So I am personally a fan of waiting until you have consistency in your trading before attempting to take any sort of prop firm challenge. But if after reviewing Prop Shop Trader, you like what you see, it fits your style, and you've done your due diligence on the prop firm, you want to push forward with it, then make sure to get that extra discount with our promo code. You can also find the link for this down below in the description. The live stream chat should also be seeing that pop up, and we have a QR code on the screen that you can scan to check them out now. Thank you again to Prop Shop Trader for sponsoring today's live stream. Now back to the show.
Nick, I think you're muted, man.
Can you hear me now?
There we go. What's up, dude?
Good morning, everybody. Hey, Chris, how's it going, man?
Good. Happy Friday.
Happy Friday. So we had some pretty big earnings last night, and we had Apple, which I think
down.
Apple had a little bit of a slide here, down 7.8%. Yep. Meanwhile, I gotta put my bragging shoes on here. Amazon absolutely blasted higher, which is my largest stock position. So I'm sitting pretty with
there you go.
Amazon this morning, though it's not been the greatest week for me here. I've had a couple losses, couple wins, kind of a mixed bag for me personally. Chris, what are you watching today? We got S&P 500 sitting in the middle of this range still. Couldn't make up its mind either ways. Huge day yesterday. How do you think we end out this Friday?
One level I'm watching. So we did poke it overnight, but 7480 for above that, this market carves out a positive candle for July. Below that, it's still going to be a sliver of red, but man, what a comeback trade from literally the bottom on Wednesday's close, and then all the way up to that performance on Thursday for just, I mean, look at this, literally down 1.83%, up 1.84.
Crazy.
Like, it's like this market, you can't make that stuff up. Where it's just like, it just doesn't care, man. It's just like so much noise from day to day. It's like, I think this also shows the power of zero DTE. It's like the market's down. All it is, everyone, is a one-day bet. So boom, it's right back where we started. And anyone that's long yesterday kills it.
Yep.
Yeah, I mean, it's trading. I think that's what this market is like. This is a trader's market. You can grind. I've actually had a pretty good week. Amazon, I've got should make like 110% on some of my option trades.
Nice.
Apple, I'm actually going to have a little scalp there because the average earnings move on Apple's like 4.3%. It came out 7%. So that's going to be a quick payout as well. Starbucks is going to be like a 200% winner today.
Nice.
With a little earnings trade. I did not participate in the energy stuff. I was looking at Chevron and ExxonMobil, but they didn't move at all, dude. And I wish I would have put on a little pin and little pin trade for those, because that would be paying out pretty well this morning.
Yeah.
So
Chris,
yeah,
the,
all it's been a good week.
South Korean stock market, did you see that?
Is it
Quick
coming back?
18% move
Okay.
higher.
Okay.
18%.
A 50%. Dude, this is crazy. A 50+% drawdown, or a 43. Oh, yeah. I mean, look, good for it. Like, it just shows that there's still appetite there. I mean, I felt like I missed one trade in this whole space. That would have been an awesome bounce right at the 200-day moving average, but it's like you're getting that benefit right now. The one trade I did miss, and I'm kicking myself for not taking this one, is SanDisk. This one came down right at the 200-day moving average, like perfectly, dude. That would have been a sweet little option trade. I mean, it ripped. Yesterday it was up over $270, and it's even up higher today with another like $60 gap. But just technically that chart right at the 200-day moving average compared to a Micron, which also had a big move to the upside and is still pushing higher, but it's in like no man's land. Like, it hit I put a 55% retracement. That's not a fib. That's just how I get some of these swing trades in between the 50 and 618, but nowhere close to that 200-day moving average. You go to Western Digital, nowhere close to that 200-day moving average. You go to Intel, nowhere close to that 200-day moving average.
Yep.
Go to Dell, right? Like, all these are like, they're all different, but SanDisk was.
I'll throw
close.
my opinion out there. I do think that the semis have a little bit more room to pull back on. I think that what you're seeing here, I could be wrong, but I think what you're seeing is a little bit of a margin flush that took place, and then positioning kind of bouncing off there. You could get the continuation higher, but I still think that if you're looking at like this SMH play here that we've been talking about, you're still keeping an eye on that 200-day moving average. You may get some kind of a bounce play here to the upside. Then maybe we roll over and test it here. If nothing else, maybe they just go sideways for a little bit, give the moving averages a chance to kind of slowly catch up. I'm feeling like we've talked about this at many times. It feels like the gold concept that we started this year with. You had the run up. Now you have kind of the popping in the balloon here. Right. And I think that can deflate for a little while. I'm not necessarily saying I think semis crash another 75% from here, but I wouldn't be surprised if once the dragon has been slayed, it takes a little time here, right? So if semiconductors, I think this is probably the first time meaningfully in a while that we've had an unbelievable rally kind of break a little bit. And so I think that can take some time to work off. At least historically speaking, that's generally how I see these sorts of things. When you have, actually, I know Jim Cramer is the world's greatest meme when it comes to markets, but he said something on Twitter yesterday. He said, like, how often do you see a parabolic chart that pulls back, very violently and just parabolic runs up again? It's not that often. It does happen, but it does seem like most of the time you get these types of runs. Once they break, there's like a little bit of a time and both pullback in price, but also time for that kind of trade to cool off. Again, we saw that in silver, for example, unbelievable move. And it takes some time for kind of sentiment to build up strength again and maybe play it once more. So
yeah. Did you read about Citadel and situational awareness?
I did. Kind of sketchy there, in my opinion.
Dude. Well, no, it's opportunistic, man. I give all the credit to Citadel and Ken Griffin for, look, situational awareness was 4 times leveraged on AI. Like, you are ridiculous. It's like, you don't need leverage, dude. Like, there's so much to be had.
You don't even need
leverage.
the things move so violently without it.
Yeah.
You know, if you're
So-
trading SanDisk, what do you need? Like, I'm genuinely wondering, what do you need leverage for on a stock that moves like this? You know,
Yeah.
that's 60% down in a couple weeks, and this was moving up 200. And like, adding leverage onto that just seems like playing with fire. You know, it's
well,
this
I mean,
is
the market's humbling, and it's like somebody that was thought of as a genius is now broke. So blows up his fund, and Ken Griffin's like, come to Papa, we'll take it.
right.
Yeah, good for Citadel, but crazy story. And I do wonder if that was like one of the, you know, multiple flushes that you just talked about, where it's like, okay, was it enough pain to hit that, like, you know, 40-50%, get rid of all the levering? I mean, even a 2x lever is toast at,
Right.
at, you know, 40-50%. So
Have you ever
Yeah.
seen those charts where it's like long-term performance on the S&P 500, and then the same kind of comparison chart? It's like, here's the S&P 500, here's the 2x S&P 500, here's the 3x S&P 500. Like, it compares the returns over time. What's
Okay.
very interesting is, like, during good times, as you would guess,
Sure.
the triple looks phenomenal.
Right.
But then you'll have like this happen, and these things will just do this.
Yeah.
And it's very interesting because, at least in the last like 20 years, I think the winner is 2x leverage. Like 2x leverage, factoring in costs
Mm-hmm.
and booms and busts.
Mm-hmm.
You definitely had higher drawdowns, but generally speaking, the 2x leverage has outperformed. Granted, you're also talking about a 20-year period that was phenomenal for stocks. So
Yeah, we've had. I mean, look, we're in the 17th year of a bull market, and
Yes.
and every bottom's been bought. It's been a V bottom galore for 17 years.
yes,
So look, it keeps working. It keeps working. I think that you know, there's a whole world that we financialized this stock market. I think that there's a lot more money to be made. We have governments that are literally participating in the stock market versus just like, oh, it just exists for capitalism and companies. It's like, no, it's like straight up in your face, shameless insider trading. I mean, you follow Nancy Pelosi now, you follow Quiver Quant, you follow Donald Trump, who wants to charge $100K just to get a Twitter feed. It's like, dude, this is insane what we're dealing with.
right.
But you know what? That's the market we have. So
It is.
you know, if you can't beat them, join them. So whatever, make
That's
the
right.
best
The
of it.
expression is like, you know, you got to trade the market you're in, not the one you wish you were in, right?
Correct.
So,
Yeah.
anyways, Chris, I wanted to ask you a little bit about gold here. Still chopping. I have my GDX options play that's going on, which definitely is taking on a little bit of water here today. But
Okay.
those are out of the money puts, so they are very. They're still actually. It's an August 21st expiration day, so we got 21 days till X date. I honestly could take a profit on those today, just because they have lost some time decay. I sold them at like the 45-day mark. So I don't know. I'm very much kind of just wait and see on gold. I would like to see this thing show some signs of strength before getting any more aggressive, just on an active trading basis. I know you're a little bit more on the longer term side, building some positions. What's your general game plan with gold? Like, are you adding actively here, or are you more like selling further out premium on there?
The latter, selling further out.
Okay.
So I'll go to, so GLD is kind of how I could scope this out. GLD, I think a lot of my strikes, Nick, are like low 300s. Like
Okay.
I've got like 300, 310 by 300 ratio spread, 295 by 285 ratio spreads. Like I'm quite a bit lower. Let me verify that here. So I'll go GLD. This should be a ballpark account to give you all my strikes.
20% lower or so.
15, so
15,
310 by
20%.
300, 295, 275, 280, 265, 280, 270. This is out to 2028. These are just bull call spreads. These are, pay $5 to make like 40 or something like that. Like, I mean, it's kind of a moonshot, but if we are, at all-time highs or close to all-time highs by, it doesn't have to be at all-time highs, but if we're bullish, like heading back towards all-time highs, these are going to pay probably close to 500+%. The ratio spreads are the accumulation, the ownership that I talked about. 310 would be my nearest strike. And so we're trading at like 370. So I still got a little bit further to run to the downside. I can absorb that without taking on too much heat. And, when I start seeing the signs of, bottoming and breaking out, which I don't think is there yet, I'll just watch the spot price. I mean, I'm ready to start just buying shares again. I dollar cost average it in, but I'm ready to start looking to see, is this going to give us some type of like falling wedge? Does this chop around for a while? I could see gold having more of like this rounded bottom versus like a V bottom. And yeah, I mean, I'll probably take a little bit of nibble, get a pullback, buy some more, build another like, sizable position back up, targeting the highs, of course, and then keep my, option trades running as well, just in case this thing, there's all sorts of price action that can happen. We could have a wedge and it breaks, retests the lows, that becomes divergent, gives us a bullish pattern. There's your trade that you really want. There's the bottom you're looking for. I just want to be patient. Speaking of patience, do you trade the Japanese yen? And have you done anything in the Japanese yen this week? Whether it was getting that intervention or buying that freaking dip because it was a textbook bounce again for at least a few hundred pips for those active watchers. So crazy stuff, dude. It's like, I wonder, Nick, like how long does this continue where it just goes up to new highs, flushes down with intervention, and then does it go right back up to 164 and higher, and it's going to look the exact same? It can't go on forever, but man, I don't know why you'd want to think like this is it. It's not it. Like, this isn't the carry trade stuff. This is repatriation. I think that we have like Japan wants to see money come back to Japan. Their yields are going higher. They didn't touch anything this week. They kept rates the same, so they're still at 1%. But I never know how to read the yen. Look, obviously, if we're breaking all the structure, we're probably unraveling. But I think if we're going to have somewhat of a risk appetite in equities, Nikkei included, you're just going to see the currency market play out like this for a while.
Yeah. No, so my thought, also, I'm just pulling up something on my screen. I'll show you this. We are adding little fun fact for Edgefinder fans. We're in the process. I can see the developer adding in some new symbols here. We got Ethereum coming and natural gas making its way. Do we have UNG? Yes.
Yep.
We're going to be adding some more charts
the
to
Widowmaker
our stuff. Kind of fun.
Cool.
Yes, the Widowmaker. Yes. And then I also, just because you were mentioning it, so I don't have anything on the Japanese yen, but I do have something on the Nikkei. And a rare sighting here. I'm actually short the Nikkei right now, which is it's a play that I've got. I'm shorting EWJ on my brokerage account, and then I'm also watching the Japanese JP225. I barely, like, you have to like zoom in here to the max capacity. I barely did not get stopped out on this last night. Right after hours, it shot higher and then kind of faded during the Asian session. So clearly my entry was not great here, but we'll see if we can get bailed out with a push lower. Kind of a play on, I generally still think that stocks look a little soft here, that you could still see the continuation of yields moving higher being problematic. So I'm modestly cautious. And that was also a bit of a hedge because I knew I was going into Amazon and Apple very long, several different stocks. So I mentioned Amazon worked out really well. That stock is flying here today. And, I'm kind of taking on the approach of like, I don't necessarily want to be mega bullish on the market, like fully positioned, but I do have a lot of long stock positions. So I'm kind of like hedging out. I've got this short trade going in the Nikkei, which is obviously kind of exposed to global markets. And the Nikkei has a lot of volatility to it. It's a big mover. You can have down and up days.
Well, we had about an 18% correction.
Yes.
Yeah.
Very quick, right? Like it can be a pretty violent one. So I do have that short play. I do think that, you've kind of lost your momentum here to the upside. And I want to bet that continues. I'll probably I will, as always, just kind of trail my stop on that one. If I am right, if we can start taking out the lows, continuing to move lower, then that's what I'll do is I'll take my stop loss and just kind of trail it along the way. So I have that play going on. Let's see. I don't have anything on the Japanese yen. I am looking at the dollar. I'm feeling actually more bearish than I have in a while, Chris. We've got huge push lower yesterday, cooler than expected GDP numbers. Inflation was modest, didn't freak anybody out. And then you had kind of the divided Fed / maybe the willingness to be a little bit more on the dovish side from Kevin Warsh, which I did think surprised the markets a good bit. So big break lower. I actually think more likely than not, the dollar maybe continues to kind of top out here, but We'll see. I like the euro dollar a little bit more on the long side, pound dollar a little bit more on the long side. Dollar yen, I'm kind of mixed, but I wouldn't. To your point about having struggles with the Japanese yen, I think most people do. It is a very challenging currency.
Yeah,
Look at
that's
this.
your currency. That's your currency widowmaker.
Yeah, look at that. So it just flies higher, and the next day it's crashing down. And then
Yep.
it could. I remember times in the past when the Japanese yen just does this for like 5 days in a row. Like it can do some really nasty moves one direction. But then to your point, just if we're looking at over the last 5 years, history would say, okay, when you have these big drops, typically they get faded back the other direction. I mean, just zoom out on any of your favorite yen pairs. And, we've talked about this pair many times. Swiss yen, notoriously, it's like every little dip rips higher, shortly after. So is that happening here? We'll see. I think, if you're just a trend follower here, you're probably looking at this and saying most of the time it keeps going higher. At some point, though, here's the risk, right? The risk is if it's different this time, it's going to be violent.
Dude, if it's if we see the Japanese yen, just because I said this in a live session yesterday, somebody's asking like, why do you hate the yen so much? I'm like, well, it trades like a stock. And when you're talking to a currency trader that has traded pivots and fibs and pockets and inefficiencies and structure, Japanese yen doesn't have it. I mean, it's like this is structure. When it's like 9 months of indecision, 10 months of indecision, an intervention, it's like you can't trade that stuff. Like the timing of that is extremely difficult.
Yes.
It's very hard to get. Like I'll look back to like 2022. The dollar yen went from like a 116 to a 150 and then a 160. It doesn't do it with pullbacks. Like you basically have this like fundamentally driven plus a technical breakout, and it just, when that is fueled with the fundamental juice, it's like it behaves like a parabolic stock where it doesn't have pullbacks. Like if you like to drag fibs on currencies, it doesn't pull back more than like 23% ever.
And then if it
and
does,
it's just gonna be flags.
It's breaking down so violently the other direction.
Sure.
Yeah.
So long story short is like a trend like that will last for 6 to 9 months before it ever turns back to normal and finds efficiencies. And so when you find yourself on the wrong side of those trades, you're just kicking yourself. And I'm saying that because that's what I did. Like I was dumb enough to short the dollar yen, even though I was long Aussie yen and long euro yen. And then at the very top, I started to get short Swiss yen. It all worked out, but my gosh, dude, I fought like a 6-month battle on the dollar yen stubbornly, all for a stupid 200-day moving average that I thought was a good technical setup, and I was just totally wrong. Fought that thing for like 3,000 to 4,000 pips, took losses along the way, made it all back. But what a dumb trade I put myself in.
I think most currency traders have had a couple experiences with the Japanese yen. It's more volatile than like all the other currencies. So a very, very common place for traders to make mistakes is, sizing is inherently difficult too, because the moves are so large. You can think you've got a reasonable size on, and the Japanese yen, you might have a stop loss in, or you may have a certain size on, and it can blow through that stop loss. It can it can be violent out there. The thing that I pay most attention to right now, Chris, when it comes to Japanese stuff, is the 10-year in Japan, because I just want to keep an eye on this because, look at the 30, it's almost at 4%. The 10-year is at 2.8%. I don't know when this matters to the market, but I think it eventually does. Like I can't see a situation where you have all this CapEx spending, this never-ending growth on, investment and leverage and dumping exposure into this AI race and trade and all that. If you quietly have borrowing costs at the anchor point, the 10-year yield in Japan, which is for newer listeners, Japan offers low interest rates, historically speaking, to people who want to borrow money globally. It's been a very attractive trade to borrow money from Japan and deploy it elsewhere because you get this low interest rate. But that interest rate has been not even gradually, it has been rapidly accelerating higher. A couple of years ago, guys, in 2023, you could go borrow money at 0.5%. Now that same 10-year is going to be at 2.8%. So you have
it's almost 5 to 6 times higher.
Yes, and that is a significant increase. I know that doesn't sound like a big percentage difference, but think about that from an input cost on a giant leveraged portfolio. That's massive. And so you have this monetary policy tightening at the anchor of interest rates globally. We would call that the Japanese yen. And so what does that do? Well, that also drives other yields higher. We see that very apparently. Look at global yields, like quietly in the background, they keep creeping higher. The European yields, the British, the gilt, right, moving higher. Japanese, US. I mean, you have, and you could take your pick. Most of the Western countries, they look the same. They're all moving higher. Input costs or borrowing costs are going higher. And so I do think that at some point that matters, especially if, you get these external shocks. If you get another oil price run, that freaks the market out because you have all this spending and leverage and borrowing going on for the AI trade, as well as, an inflation shock that would maybe force the Fed to hold rates or maybe even hike them. So it is a serious contention, and sometimes markets don't care about something until all of a sudden they do.
Right. Well, Nick, do you think that Warsh and company can truly talk this bond market down? Talk like bond yields down? I don't think they can talk the bond yields down. Clearly, you look at this week, it's like it's all noise, but we're right back up to those tops again on the 10-year, on the 30-year. It's like and granted, the Fed can really only talk like the short end of the curve, because that's when they're looking to like hike or cut. It's the short end they're trying to manipulate, but they're trying to just tame the long end. Like, I don't know if I think we had one of the steepest divides between the 2-year and the 10-year, like this last week or two. So like these aren't good signs. Like analog wise, this is not a good sign. But I just don't think that, I think I saw like Jeffrey Gunlock say like talk is cheap, and it's to a point it's true. It's like we sat through the first press conference with Warsh in July or in June. Another one, this month. It was just this week on Wednesday. It is talk, dude. Like, to try to just confirm like our price target is 2%. There's no soft inflation target. This is our price stability target. Task force. It's like, okay, I hear you.
Yeah.
But I'm not seeing it reflected in prices, other than the equities market hasn't really flinched. Down Wednesday, up yesterday. We're right back where we started. But if it matters, like, we'll see price action move pretty darn fast if it does matter. I just think this market is still so good at down one day. It's a 0 DT bet. Take a stab at it, and it gets flushed right back up. It's impressive stuff, but I don't know, man. I mean, I just keep saying I'm cautious. I'm cautiously bullish for now.
I think it's the tricky part with the Kevin Warsh Federal Reserve stuff is that I think that the market thinks he's going to have to hike rates. I think that's pretty clear if you're looking at the 2-year. Mm-hmm. And I think that there was some valid questions when we were listening to him, listen to the press conference, when people were saying, you're speaking on the idea that we're hard on inflation, we're going to get to that 2% target. Here's the bond market telling you they think you're going to potentially hike rates.
Right.
And I think the biggest takeaway from the entire Fed meeting is that I know he's not about forward guidance, but that was a very easy opportunity to say, we will do what we need to do if the data continues to come in where inflation is problematic. A hike is possible or a hold is possible. He didn't even acknowledge
that's Powell style. That's a Powell style, right? Like Powell would do that. Yeah. He would literally say both, but like Warsh just didn't say anything.
Yeah, he said nothing, which I think like, okay, here's the bond market. Everyone in the audience is saying bond market's saying you'll hike. Is that a possibility? And he basically said nothing. Like he said, like we won't. He just said
task force. Task force.
Yes. And I think that like that actually makes a little bit of mistrust in the Fed, like not knowing at all what the Fed is thinking or doing. Yeah. I think in some ways I understand that not having forward guidance is one thing, but then also like stick to the concept of you are saying you're going to watch what the market says because it's pricing in things real time. Okay. Well, then acknowledge that a rate hike is possible, right?
Sure.
Like, if that's what the market is telling you and you're saying you depend on what the market is saying for your inputs or to help you, then acknowledge that a rate hike is possible. But I mean, no guidance is interesting.
This yield, like the 2-year yield right now, shows that the Fed is typically behind. It's pretty much behind like two hikes, two to 3 hikes. I mean, that's every macro analyst is saying right now that the Fed is probably behind 2 to 3 hikes to get back to neutral. Like, even though it doesn't seem like, oh, they haven't done anything, they're still accommodative right now based on what the bond market's telling us.
Yeah.
And so saying nothing and just letting the bond market continue to drift higher, it's like this. I mean, this Liberation Day was a bond market flinch that the whole world felt, and the aftermath was a giant pivot and V bottom. But I do think we might head into another event similar to that, which is we just have like another kind of something breaks and then we have to fix it. Those aren't easy environments to trade because you never know like what's going to break. Is it going to be bonds flinch, equities snap, V bottoms, tops, parabolic? I don't know, but there will be something to watch. This is why I'm not heavily positioned at these tops. This is why I'm just trying to stay pretty cautious. This is why everything is defined risk, unless I'm at a spot where I want to own things like 20% lower. So, but looking at how this price action played out this week, I mean, the market just doesn't like to quit. So, I mean, if we go back to just SPX for right now, I mean, what an incredible grind. I mean, from literally the one flush we've ripped up from that reflexive rally from, end of March, April, May was just nothing but up. We poked these all-time highs in June. We've gone nowhere since.
Yep.
So, I mean, we're looking at like this little mid top in the middle of May. Now here we are at the end of July, and we have gone absolutely nowhere. There's been tons of opportunities in here for 0-day trading, which is incredibly popular, but I can say I do this stuff every single day, and it has been a freaking grind, dude. And not like I've made good profits, but holy crap, is it like, I guess you just ignore everything else. If you're going to trade 0 DTE, just ignore Trump and Warsh and global markets and just trade what you have. Like trade the S&P 0 DTE and try to carve out a winner. That's one complete methodology. It just win the day. But on top of that, as far as investing and positioning, it's a very different game. And it's like, that's where I'm struggling to, get more committed to a bull market where it's like, I don't like these levels because I don't know if and we've talked about this, Nick, like, do we just grind higher? Is this going to be, it won't break the lows. It won't break the lows. Every down day is bought up. It's like, okay, so is this the chop fest that maybe still makes all-time highs and it looks something like this? That to me is not a fun bull market to participate in.
That is not a fun bull market, no.
Right. And if that gives way, it's like that structure breaking is where this all comes apart very quickly. But the alpha there is very difficult. And I mean, I think right now, because there was such a big pop in the semiconductor space, that's a whole different animal of like how bullish and how crazy and volatile you want to, what sandbox do you want to play in?
Right.
You want the S&Ps to just churn and indexes are grinding while individual stocks are all over the place. I mean, that does work if you're a good stock picker. I'm personally not a great stock picker. I don't like to chase stuff that's already on the move. I don't like to chase, IVs at 90 when it's like, okay, so it's going up, but I'm gonna have to pay, I have to pay for the entire expected move to get paid on that move. It's like, it's just not fun to trade that way. So anyway, it's a grind fest for me, but hey, maybe everyone out there is killing it. But you see stuff like, situational awareness and what happens. It's like, that is out there. Like there are more funds like that you'll never even hear about, but I'm sure there's been booms and busts in the entire industry with like how AI has ripped and now it's given some sizable corrections. And I'm sure that it's fascinating to me that it's like you could be up that much with 100+% moves in individual stocks and you're 2 to 4 times leveraged. You could be up that much and somehow you lose it all. Like when is enough when it's like, hey, my fund's up X. I mean, just then protect it. Learn how to hedge. For God's sakes.
It is fascinating. We watched that with Kathy Wood too, right? Like massive outperformance. I feel, this is obviously hindsight speaking, but not even like just the way I know you and I are. Like if you're running a fund and you have that sort of outperformance, dial it back, settle in a little bit, and kind of wait for the next more clear opportunity. But it is so often the case that you see, and I guess this happens at the hedge fund level. It also happens at the individual, person's portfolio level where you have this incredible run. You think it's never going to end. And then suddenly it does. And it can get ugly quickly. So, Chris, I know you got to run. It's Friday. Thank you for coming on here and sharing your thoughts as always. And have a great weekend, man.
Yeah, you guys too. Thanks.
See ya. Guys, up next, we are going to have Alan Perez coming back. He was here earlier, talking a little bit about gold and taking a look at the yen. Fascinating stuff going on here. I just wanted to give a quick update on gold. So I do have my short put position. It's still in profit. I am contemplating just taking a profit on that one and just moving on. Gold has been just super choppy here. I am looking still for possible breakouts to the upside, but nothing yet. Every time you get a little bit of strength or a little bit of weakness, the chart reverses. If you're a range trader, man, it's been a great opportunity. If you're watching gold here in the last few weeks, same with S&P, man. If you've been range trading this, that's been a clean range to play in. For us trend followers out there, not so fun. Range bound markets. I've taken 2 losses on gold here. I had really nice shorts over in this period of time. This was really nice when you had some follow through. Then I've had 2 back-to-back losses on gold. So I'm just sitting carefully. I guess 2 losses and 1 win. I've played the range actually decently well with my options play. So I'll take what I can get because gold has been a kind of choppy beast here recently. I'm curious. Let me ask you guys real quick before I get out of here. If you could give me a 1 in the chat if you're a gold trader, actually, we'll open this up. 1, if your trading has been good recently. 2, if your trading has been rough. Let's be very honest. Like, it's a safe space. No one's going to judge you. I'll give you mine. My trading has been, I compare myself very heavily to the benchmark, to the S&P 500. My trading's been like right in the middle. So we'll give a 1.5 as an option. Mine's in a 1.5. It's been mixed. Like, I've not made a lot of gains, but I've missed some of the recent sell-off in tech stocks, which I felt pretty good about. So it's been actually the last few months for me have been a little bit like that. Like, I've not gained a lot or lost a lot in my portfolio. It's really been, as Chris was putting, a grind fest, a chop fest here. And my performance has been kind of mixed. So thank you guys for sharing your status. If you're feeling like this has been a tough environment to trade gold in, then you're probably a trend follower. And I am with you because it's been definitely a challenging one to watch this thing just kind of be so indecisive. But don't you hold your breath because gold loves to do this. And then one day you'll just look at it and it will be moving more decisively. I'm ready for it. So, and I hope that, we can stay patient, be ready for that next setup. Guys, last thing I'll say, and then we're throwing the show over to Alan. Our summer sale today is the last day for the summer sale event. Get Edge Finder at the lowest price of the year. Scan the QR code that is on the screen right now to speak directly to our support team about setting up a payment plan and taking advantage and getting that discount information for the 40% off sale that is going on. You get access to our tools. Here's a little bit of intel on that. It's a one-time payment for access. Almost no one in the space does this. Everyone's got subscription models. Everyone offers their products where you pay into Continuum, but not Edge Finder. It's a one-time price. You pay once, you get access, and then all of our future updates are also yours for free. So there have been people who have been sitting back since we launched this product in 2022, have watched this thing just evolve into a beast of a product because we've got some great people behind the scenes working constantly to keep it improving, adding more data, options data, COT data, macro scanners. Like, we are piling in data here. And if you buy it, you get access to not just the product today, but all the future updates without any upsells. We don't upsell people on Edge Finder features. When we roll out features, it's yours. We will not charge you again for it. It's not in our custom ability to do that. Like, this all gets updated for everyone simultaneously the same way. It is a cloud-based product. It's yours. You can use it on desktop, on mobile. You can use it on multiple computers. It is just a browser report that we upkeep behind the scenes so that you have your data and can watch the charts that you care about. Get access to Edge Finder. The link is in the chat here. We'll drop it there. There it is. Boom. 40% off happening now, or scan the QR code below my camera. Up next, Alan Perez is back for his second segment. Sorry, Alan, we ran a little bit over, so you are on after this. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hello, everyone. Good to be back. Good little break there. It is Friday, guys. What are you guys looking at here today? Are you guys trading today? Are you guys going to sit back and relax? I'm kind of going to sit back and relax, but if you have any chart markups that you want me to go over, maybe any trades that you're in, feel free to drop those into the chat, and I will do my best to go ahead and go over them with you. I'm also just looking at some other currency pairs that I want to potentially take advantage of here if you do continue to see that dollar bearishness play out. So I'm personally watching this level here. I talked about this in my earlier segment, DXY at 100.5-ish area. I'm looking for this level to hold. If bears step in and take it to the downside, I'm going to open my scope and maybe trade some more. So I have euro dollar running to the long side, looking for pound dollar. It seems like we may get that dip to the 38.2, which I really like. But then I'm also looking for Kiwi dollar as well, as I was kind of just doing some research here on the backside. I really like that. So I'll go over it. Alan is back. Alan is back, man. 2 times a day. Alan is back, dude. Pound Kiwi, yeah, we'll look at yen. The yen, that's a tricky one. We'll look at the yen as well. What's dollar CAD? Waiting for another round of intervention. I thought we got some last night, to be honest with you. 3 a.m. my time, this big red candle here. I thought that was it, but we'll see. Again, UJ, very, very important level here, 160. You had a very clean to the T, touching that 200-day moving average. Dip buyers went ahead and stepped back in and brought it higher. Now, the real test here is this level right here. Is this going to be bearish move up here, retest, continuation lower, or is it going to be a buy the dip on dollar yen and just take it higher? That's the big question here. So this level 160, super, super, super important for me. I'm going to be watching that one. I'm also watching that DXY level again, like I told you guys. And depending on what happens there, I'll go ahead and continue trading to the euro dollar upside, pound dollar to the upside, maybe Kiwi to the upside as well. You are selling pound dollar, Rons. Well, Rons, you are probably in profit right now. So we'll see who wins. Gold is crashing. Gold can pump max 2 days and then no buyers and sell. You know, so Nick was talking about like, how's your trading been, right? How's it been? I feel like it's been so tricky, and I would imagine you guys all feel the same way. So tricky to make a directional call and actually commit to it, right? Like, how many of us have like trading is one thing. How many of you guys have had struggles like making a directional call and actually committing with it and letting it play out? Type 1 if it's been difficult. Type 2 if you've been calling the market and you've been killing it. But me personally, I'm in the one camp where it's really, really hard. You have fundamentals telling you one thing, and then you have the Middle East stuff telling you a whole different thing, and it's overriding everything. It's just been very, very tricky to commit to a directional call and let it fizzle and play out and let the trade mature and do its thing. I would say that's been definitely my case. I'm seeing a lot of ones in the chat. Marvelous here is just kicking it out of the water. He can make a call. He's calling the market. So is this guy right here. So good for you guys. But for me personally, it's been a rough ride. So to your point, gold has been a definite chop fest. You have. Let me break it down for you guys. For anyone here new looking at this, the gold fundamentals right now look pretty dang solid, if I'm being honest, right? You have a softer dollar in the play. You have, you know, when it comes to inflation numbers, right, cooling. You have growth cooling. All of whatever you could imagine, right? It's starting to paint a pretty good picture for gold. You also have this technical break as well, right? Now that's another technical confirmation. Yet gold is chopping around, and today it's down 1.6%. So like, what's going on there? Well, you have this puppy right here, which is overriding the whole thing. Oil, right? If oil continues to drift higher there, then that's the inflation concerns. That's, you know, yields higher, the dollar higher. Not to mention, we had a FOMC this week. What that was a little bit mixed. You had Wars trying to become dovish. He's voicing dovishness, but then he's also trying to talk down the bond market, and the bond market sniffed it out, and they said, hey, joke's on you, but we're going to keep pushing this thing higher, right? So you have a lot of interesting dynamics in play that make it really, really hard for something to make a one directional push. That's why you're getting a lot of this choppiness happening here. So if you're experiencing that, don't worry, completely normal. Hopefully sometime soon conditions improve and you get some cleaner moves, and then all is good and dandy. Gold has been kicking me. Well, I've only had 2 attempts on gold, and so thankfully I haven't really been too active there. I've been pretty patient. I was kind of waiting for this to fizzle out here and get a breakout, but I mean, we got that technical breakout, but still nothing happened. Like, you got the breakout here to the upside. I was expecting something like this. I was expecting like 4,200 to break, something like that, break, retest, continuation higher, but we got the opposite of that. We got basically the breakout. We tapped into the top end of this range, and we're probably going to be, somewhere right here, and we're probably going to continue to see this. So that's kind of the boat that I'm in right now, but we'll see. We'll see if things starting to improve. Could gold and oil move higher together? I mean, hypothetically, yeah, anything's possible. Rumors say Fed didn't hike to save JDX. JDX, am I missing something with JDX? Don't know. I should stick to my range, but I had to hold for a breakout and a bad idea. It seems like range trading is the move. I mean, the range trading on S&P, the range trading on everything is pretty much the move. But Marco, how you doing, man? Happy Friday to you.
Hello. I'm pretty well. How are you?
Pretty good, man. Doing anything
cool
this weekend?
Sorry?
Doing anything cool this weekend?
Well, going to the seaside. So that should be fun, and helping my dad with something. He's building a small house. So there's the seaside, and near the seaside are the big mountains.
Yeah.
So he's building a small house in the mountains, and he decided to do it mostly by himself, except the outer structure. So of course I'm gonna help him and my brother, and it's gonna be like a 2-year project. But it should be kind of fun. So we'll see how that goes.
That's pretty sick, man. I don't know Marco was the construction guy. Yeah, so Marco's dad is
moving
a
up
Chad,
to real
man. You're gonna
estate.
have look, I went to Croatia this summer, and bro, the views, like when you're up there on the mountains, is it gonna be like overlooking everything, I would imagine?
No, it's actually underneath a big mountain. But
Underneath
the view
a big mountain.
Yeah, the view is at the mountain, and there's like a small ski slope. So in the winter, it should be pretty fun.
Dang, man. Well, that's pretty sick.
Yeah, could be pretty cool. Has a lot of potential. So yeah, we just need to build the damn thing, and that can be a bit stressful, but we'll push through it.
Yeah, well, I bet you, man. Well, that's good to know. Beautiful, and enjoy your time at the water.
Thank you.
What are you looking at, Marco? We've had lots of moves happening. We had Fed, then we have Bank of Japan, the intervention, and then you had Bank of Japan actually, speaking last night. So any interesting takeaways, or do you have? I was telling the chat here, along with everyone else, I've had a pretty tough time making like a directional call, like a long directional call, and sticking to it and committing to it, because it usually just chops around it or ends up not working at all. So I'm curious if any clarity has been brought to you after this week on this Friday.
So my mind is still a bit of a mess, because we had a lot of stuff: Fed, BOJ, intervention. But as my thoughts are clearing up a bit, it's clear to me that I want to stay long on the yen. So I want to keep on doing that. The interventions, they usually come in 2 days. So they intervened yesterday. They intervened a little bit like 2 hours ago, and they could do a little bit more as the day progresses. So that could be the price action for today. And then a bit of a long-term view is the BOJ meeting was hawkish, you can say, but not as hawkish as I thought. First, I thought we were going to get a surprise rate hike. Second, I thought at least they were going to signal a definite rate hike at the next meeting. None of that happened, but the odds actually did move in favor of a hike at the next meeting. So if you watch Kalshi, like the prediction markets, you will notice that the probability for a hike on the next meeting has gone up today. So it has been a little bit in favor of the yen. And on top of all of that, you have the pension funds, which should or have already started to sell foreign assets and buying domestic. So essentially, it's kind of like three forces all moving in one direction. So intervention, BOJ getting hawkish, and the GPIF pension funds doing their thing, which could mean a bit of a longer term uptrend on the yen, like we saw. So we saw one, I think, in July of 2024, basically. Yeah. So I'm thinking that the July 2024 trend could happen again. Now, of course, that's not definite. We could just get a one-time spike and that's it. But that's how I'm going to be positioned. And then I was thinking about what can I do with the dollar. So how can I trade the US dollar? And basically, for the US dollar, I think buying dollars into the CPI print could be the way to go. That's kind of my take.
You're thinking
Because
of
I think
going
we get a
long
hard
dollar?
print. Yeah, sorry, didn't hear you.
You're thinking of going long dollar into the print?
Yeah. So it's, I think, 12th of August, going long dollars into the print because I'm betting on a harder print, and then going flat by the Fed by the time we get the Fed, because I think the Fed is going to be dovish. I think the Fed is only going to get hawkish once inflation crosses, I don't know, maybe 6%, 7%. And up until that point, I think every meeting is going to be dovish, which means you can either go flat into the meeting or you can sell dollars and then be flat into the meeting. And after the meeting, if it is dovish, you can go risk on. So you can essentially buy stocks, or you can sell the US dollar, or you can do something with bonds. So yeah, I think we get another trade at the CPI and at the Fed in September. But what do you think? What do you think is the next trade?
I'm actually conflicted now. I just pulled up JXY here, and I told you yesterday that I wanted to see what happens here when we get to that 200. And so you kind of have like this very mature kind of situation here going on, where you have you could see this trend line here, right? Like this thing right here. And then the 200-day right there. We got pretty close to it. So I'm curious, like, if this was a dip and I missed it, because I did say that I wanted to buy or start like selling yen at the 200-day on JXY, and it seems like I missed that entirely. So kind of mad at that now. But I'm looking at this, I'm saying, well, in the event that you do get a breakout higher, then maybe you get some kind of a bigger trade unraveling here, and then you can look at like levels like this. But yen is very, very tricky. So I'm going to keep that in mind. I'm going to look at that, but I'm not going to marry that idea. I'm just going to flirt with it a little bit. So I'm going to look at it and not really look at it too much. But looking at, for example, DXY here, I think that you have this level that I'm watching very, very closely. So like to your point, Marco, I think if this level holds as resistance and takes it to the downside, I'm kind of bearish dollar. But if this level does not hold as resistance, and you see that you got dip bars back in, and you see this kind of like play out like this, then I think buying some dollar back could probably be the play. It's very, very iffy though. Like my struggle here is that right now you haven't seen either one play out, so I can't really commit to one just now. But from the bearish side of things, you have Edge Finder starting to point bearish. You had some you have growth starting to slow down a little bit. Employment's going to be big too, so that should be next week. NFP, if that misses, then maybe like, forget the inflation. Even if it is what it is. Like if the Fed now has to choose between labor and inflation, that could be a whole nother question. So I'm going to be looking at that one as well. But for me personally, technically speaking, you had this upward trend line. We broke it here. We had a solid close. We had another solid close. So I'm waiting for the retest here. And if this level of support or resistance fails here, which is that 100.5 level, then I can make a stronger kind of directional bet. Now, when it comes to how I plan to play that out, euro dollar long side like that. Max is saying new intervention yen. So I'll get to that here. But I would play euro dollar to the long side, pound dollar to the long side, and Kiwi dollar now looks pretty cool to the long side as well. Like I'm looking at this 200-day moving average here. Like this is pretty solid here. We've now tested above it. And I was looking at this, Marco, looking at Kiwi. You just type NZD. The whole, like pretty much the whole thing is bullish. Kiwi dollar is bullish. Kiwi yen's bullish. Kiwi CAD's bullish. Aussie Kiwi's bearish. So I'm kind of looking at some Kiwi as well. So I'm looking to add on some pullbacks. So I'm going to be patient with pound dollar and Kiwi dollar. With pound, I'm looking at 38.2. If I don't get it, I'm perfectly fine with just holding euro dollar, and that's it. Kiwi dollar, same thing. I'm looking for a pullback. If I don't get it, that is perfectly okay. I'll let it be. But let me go ahead and address the chat here because everyone's saying intervention. Let me see. The U.S. Treasury has informed banks that it may intervene in the yen market on Friday. So that's just a speculation. I don't think that they may do it, right? I mean, sources familiar with the matter. That's basically trust me, bro. Like,
yeah, I love those posts.
Someone, right? Like,
yeah. So that just printed, right? That's a fresh
that
print.
just printed. So I
What
mean,
does that mean?
You're seeing some softening, but I mean, I don't know.
Let me see my Swiss yen.
Not an intervention candle to me.
Yeah. It's getting retraced all the way, almost. U.S. Treasury has informed banks that it may intervene in the yen market on Friday. Okay, so maybe they did do an intervention a bit later because the New York has just opened, right?
Maybe verbal fears to prop it lower without having to do it, and then if it doesn't work, they'll do it. But again, I'm not really seeing anything unless they, I don't know. But we'll see. We'll look at the price action. The price action will tell us if you see a huge drop again, then most likely than not, it is some type of intervention or it's the verbal one working out. But to me, like this right here is like
nonsense.
Yeah, it's like if I told someone at whoever, like, hey man, we're gonna intervene today. It's like who what's your name? I'm not gonna tell you my name, but it's like I'm nobody to them, right? like,
yeah, it was the same with the Middle East. Like U.S. and Iran have a deal. Sources or source familiar with the matter. That was usually the case, and we got no deal. So essentially, you know what? It's tough for me to pick a more of a long-term direction. I have one on the yen, and that's about it. Do I want to take some longer-term positions on the dollar? I don't know. I would rather maybe play the CPI and the Fed September print. I think the best edge would be playing the Fed September print. So essentially, you can do something that's called a run-up trade. So a run-up trade is essentially a trade that you place going into an event. So if you think that most people are gonna expect a hawkish Fed in September, you basically buy the US dollar, you sell stocks a couple of days before the event, and you close your position right before the event. You could have done that on Wednesday. You could have bought dollars, sold stocks, and then close the positions right before the Fed. You would have made money. Same thing could be done for September because just from the tone from Warsh and the way that he was speaking, and he mentioned that the last CPI print was encouraging, where it was just a lower print because the straight at that time was open. So I would completely disregard it. I would say he's going to try and act dovish as long as he can until inflation goes above 6 to 7%. Yeah, basically.
It's so tricky. It's so tricky because like he's trying to talk down like rate expectations and stuff like that. So he's like trying to play with, fiddle with, manipulate this chart, the 2-year, which even then, like he's doing a bad job at it because it's continuing its upward trend. Like even that's not following with it. But because he's doing that, it's a bad look. It shows maybe
it's definitely a bad
misalignments,
look.
disagreements, whatever, the division. And that is not looking good for the long end, the 30-year, which that in itself is problematic. So that's like super tricky. Like, I don't know. Maybe they know something we don't know, but I think that the market right now is not pleased with it. It's pricing in uncertainty, divided Fed, lack of confidence. Me personally, and I think that could be another layer too to unwind some dollar positioning. Like if you start to see that happening, you know, pulling out of bonds, pulling out of dollars, pulling out of whatever, moving elsewhere, moving to cash, or maybe moving to gold, fingers crossed, right? But you know, that's kind of what I'm seeing playing out right now.
Yeah. I miss Powell. I don't know. Look, the main guy is supposed to be the politician. He's supposed to say 100 words without saying anything. So I think Kevin and Powell, all of them were picked because they are great at talking about a lot of nothing. And every time he got asked about inflation, he dodged it and kind of walked around the question. So that's just the way that they do it. But if you look at what they're actually doing, the actions, they're staying dovish. Most of the time, they're staying dovish. Raising rates is usually the least favorite, the least popular option, because they have a bunch of rich friends, because everyone wants to be a hero, because they want to cut rates, because that is what the public loves, or let's say rich people and people in finance. So they're usually late to the party when it comes to hikes. They're going to be late to the party again this time, or that's my bet, essentially.
Let me show you this, Marco. So Warsh, we can agree that he was trying to be dovish in a sense, right? That was his what he was trying to do, to kind of illustrate and showcase the potential division of the Fed. I don't know if you saw this morning, but Fed Hammock, I'm not confident that inflation will ease absent action from the Fed. He also said, to manage against the risk of inflation becoming entrenched, would prefer to tighten policy incrementally. Then this one, inflation remains elevated. A potential series of small policy moves would be better than waiting and concluding that bolder actions were necessary. Basically saying we should move small instead of being called too late Warsh or too late Fed, 6 months, a year, 2 years from now, right? Like that's kind of like to kind of illustrate the kind of division that we're seeing here, is where like the chairman is saying, we're gonna be patient, we're gonna be data dependent, we're gonna basically trying to be dovish, but then you have other members saying, yeah, like we should probably do the opposite of what he's saying.
Yep. It's 12 members, right? So they need to get together. We had 3 dissenters, 3 people voting for hikes. Previously, we had only 1, I believe. So we went from 1 to 3, which is the difference. We may get 4 or 5 on the next one, but you need 6. You need at least 6, and I think Kevin can cut it and basically make a decision. Just by looking at the historical data of how quickly or slowly they react, they're usually really slow to hike. And if there's an opportunity to cut, they cut like this. So it's not a bias that I have. It is just something that is a fact and the way that I'm going to trade it. So yeah, if you're a trader, you need to pick a direction that makes most sense for you and then trade around it. That's why just maybe not having a longer term picture, but just trading these events, buying the CPI, buying the dollar on the before the CPI, selling the dollar at the Fed or after the Fed could be the play to go. What's your take on stocks? What's your take on Mr. Leopold and
Leopold?
Situation?
Well, I wish I'm the most happiest waiting, all things considered.
Yep.
That's tough. I think even stocks are showcasing this. Like, I'm gonna have such a boring outlook here, but like indecision. This is it, right? Like, doesn't know what's happening. It's trying to grind higher, this S&P, yet you have yields rising, you have oil here potentially becoming a problem once again. Like, you have this chart right here. Like, if you come back above this level here and you're back operating in this channel, that's problematic. Yet the S&P is like saying, nah, we're okay right here. We're just gonna grind it out and chill. Like, that's kind of problematic to me. So I don't know. This kind of worries me. I don't want to participate in this. I want to see, as bad as it sounds, I want to see some violence. Like,
okay,
not like in the Middle East. Like I mean, like on the chart, like violence on the chart, like something like tough, right? Something that's very scary.
Yeah.
But
you're
for as long as
a warmonger, is that the expression?
Is that what it is? Yeah. No, I just want to see something here on the chart that's not this. Like,
yeah, I agree. One positive thing is that in 2021, you know about Cathie Woods, right?
Yes.
She has like an ETF called the ARK Fund, which you can invest into. And she basically lost 70 to 80% of the value of the portfolio. So she probably doesn't know what the hell she's doing. But anyway, once that news broke out and everyone was talking about Cathie Woods and how incompetent she is, that was the bottom in 2021, I believe, for stocks. So this time it's Leopold, same thing. People are roasting him online, but it could be actually the bottom of this short-term cycle. So we may go to all-time highs as sort of this panic around stocks and AI and massive funds blowing up is really prevalent. So that's just a side note.
That's just like such a common case of like what over leveraging can do. Like he was an AI guy. I think he was at OpenAI or one of the AI companies, and then
OpenAI.
he like brings out this like 160 something page kind of like thesis on what's going on, and that was very attractive and very sexy for investors. And then he turned like a couple million, like maybe sub 25 mil to like billions. But then he was like 4x leverage on everything AI. And when you see AI fear trickling, when you see the reactions that you're seeing, especially like in Cosby, right? You have Sangsum and SK
Cosby,
Hynix here just
Mhm.
falling off a cliff. Yeah, that's gonna if you're 4x leverage, bro, this is down what 40%. If you're 4x leverage, you're gonna get wiped out. And then
Yep.
what happens, right? When that happens, you tap into that 200-day moving average and you have one of the best days in a long time. So the
Yeah.
only variable you can control, I say all that to say, is the only variable you can control is your risk. Everything else is uncertain. Have that number down, accept that number whenever you enter a trade, and you should be okay. But Marco, I'm going to go ahead and pivot out here. I have to run an errand real quick.
Yeah,
I'll leave
sure,
you
no
to your
worries.
solo segment. One thing I'm going to say here, guys, well, two things, two pitches for you guys. This is, I didn't know this, but this is the last day for the Edge Finder sale. So go ahead and do that. Go ahead and if we can drop the link here into the chat. I lost my clipboard with my links, but if we can put the link for the Edge Finder sale, it is 40% off, 45% off. If you say that you're coming from the screen, from the stream, you can use code Marco or Alan, whichever one you would prefer. And one last thing for you guys, go ahead and join the Telegram channel. It is completely free. All the updates that you would need will be updated here. You also have promotions for discounts for prop firms, all that good stuff, bonus content, everything you could ever need for your trading right here for free for you on the Telegram channel. So go ahead and do that. And Marco, thank you, man. And I hope you have a fantastic time on the seaside. And good luck building, man.
Thank you. I wish you a happy weekend as well. And I'll see you on Monday.
All right, man. Take it easy. Bye-bye.
See you. Goodbye. Okay. So looks like Swiss yen is doing pretty well. Getting another leg lower. Let's flip it to the daily chart. I would love it if we can break the low. If we can break the low of the intervention. Let me just see. GBP, JPY. Okay. Yeah, everything is kind of falling lower. UJ. Yeah. Alan says, Swiss yen, nice man. Congrats. Thank you. Thank you, Alan. I took 30% off, closed a little bit, letting the rest run. At this point in time, this is more of a longer term position. So I plan on seeing long-term yen strength. Let me go to the JXY. JXY not really moving drastically, but overall moving up. If you look at 2024, it started in July and it lasted for a really long time. So if we can get something like this again, because you're having three forces all at once, you're having intervention, hawkish Bank of Japan, and then you have, what else do you have? GPIF pension funds. Okay, the pension funds are selling foreign assets and buying domestic. So that's the GPIF. And you have three forces at play. I think you had a similar thing in 2022 or 24. I'm not sure, but yeah, hoping that this can be just the start. And that's my long-term view as far as the yen goes. On other currencies, I don't really have a long-term view. I was in USD CAD long. That didn't work out, got stopped out. But part of the game, managed to do pretty well with Swiss yen. So that is going to pay for that loss. This was a signal in the A1 Discord. So if you want to get trades such as this one, I've had a pretty good year. Let me show you my DarwinX. So yeah, this is my DarwinX account. I'm up 20.23% on the year. So had a pretty good year. If you want to get these trades, get these signals, definitely do consider joining the A1 Trading Discord. The link is in the description of the stream. And make sure to use the code Marco to get 45% off. It's both for the Discord and for the Edge Finder as well. So Edge Finder, last day today for the biggest sale of the year. I highly encourage you to check out Edge Finder. If you look at the Trustpilot reviews, 4.8 out of 5. That's amazing for this niche, absolutely. 242 reviews. Whatever you're buying online, always check the Trustpilot first. See all reviews. See? Okay, read through them. So read through the reviews. Look at the ratio of the negative to the positive. Join a Discord, talk to other traders, and you will see that the Edge Finder is the real deal. I use it on a daily basis, and I use it to structure like 90% of my trade ideas. And yeah, don't forget to use the code Marco because it gets you 45% off. Mega D. Is it the... I'm not going to comment on that, but I'm sure JPY. Okay. All of you ask AI, do your research high oil prices puts bigger pressure on BOJ? Well, it does. High oil does put pressure on the BOJ. And the reason is that basically oil gets more expensive, so the yen loses value because you need dollars to buy oil, especially if you're buying from the States. So you need to convert your yen, you need to sell your yen for US dollars. Basically, the correlation should be as oil goes up, dollar yen, because of all the oil importers, dollar yen should go up. Okay, so dollar yen should follow the price of oil. What else is interesting today? Well, not gold. Gold is having a big red day. So if I zoom out, gold is clearly in a flat range and is not moving anywhere. So my edge here would be almost non-existent. I'm personally waiting for a break of the 4K level and kind of staying away from gold at the moment, but it's kind of a big candle. Stocks, doing okay. Definitely had a big blue day here. Nasdaq, big bounce. So that Leopold guy apparently got liquidated, or he had to sell his holdings right at the bottom. But my question is, if he can survive, so if he cannot survive a push lower such as this one, which is it's not a big crash, like from the highs, this is only 11%. This is nothing. He would probably get crushed even more if we got a real correction, if we got a real move lower, such as this one. But this one was small as well. So this was 25%. So my conclusion is this pullback was small on tech stocks. It was small. Yes, he was maybe in the Kospi, but you should be able to survive 20, 30, 40% pullbacks, 40% drawdowns. That should be survivable. It just tells me, and I'm young, so I don't have a lot of life experience or experience in the markets, but it just tells me that the guy was 24 and he didn't have a lot of experience in trading the markets, and he just thought that the train was going to continue going up for forever, basically. So in the trading niche, I found the thing that has the most value is experience. It is something that you can't learn in a couple of days. It is something that you can't buy. It is something that takes decades to develop. So personally, I'm following Brent Donnelly. Guy has like 30 years of experience in the markets, and the things that he notices are something that are super crazy to me, but are true, and he usually makes money because he has so much experience. That's why the most successful people in the markets are going to be like 50, 60, 70 years old. That's just facts. You need experience. You need to go through 1, 2, 3, 4 market cycles, go through COVID, go through 2008 crash, go through a Black Monday, go through some sort of a crisis, go through wars, and that way you experience a lot of stuff, and you know generally how the market will move. 30-year bonds pumping. He's already liquidated. Yeah, I'm guessing like you're 24 years old. When I was 24, I'm 27 now, or 28. I always forget. But anyway, when I was 24, I was trading SMC probably at that time. I was trading liquidity sweeps. I was trading liquidity sweeps when I was maybe 22, 23. But so I got a bit wiser. But, 24 is nothing. Yields pumping up a lot. 30-year. Yep. So 30-year looks really bullish here. TLT is probably falling down a lot. Yeah. See, this is a problem. This is a problem with the Fed that notices a high CPI, high inflation, but decides to be dovish. And we saw this story happen many, many times in the past. Many, many times. So it's nothing new. I have one more minute, and then I'll pass the stream on to, I think it's Tiger. Yeah, so Tiger is coming on. First thing, the main trade right now, selling the yen, in my opinion, is buying the yen is a good way to go. Second thing, on the dollar, I'm looking to buy dollars going into the CPI print because I think inflation prints hotter, and I'm looking to position myself risk on in September after the Fed meeting because I think the Fed is again going to be dovish. So those are my trade ideas for the future. Do take advantage of the Edge Finder. So last day today, 45% off. Edge Finder. Code is Marco. Best software for trading, hands down. Okay, changed my trading completely. So biggest sale of the year. Do take advantage. Thank you for watching. You can catch me next week. I'll be streaming every single day. And do not go anywhere because Tiger is coming on in 30 seconds. Thank you. Good luck and talk soon. Goodbye.
Don't go anywhere, traders. The show will be right back with our next show host. But before we get back to the show, I wanted to mention today's live stream sponsor, Ola Prime. Ola Prime is one of the fastest growing prop firms that I've seen in the space, and they offer a super wide range of different account types. Whether you trade Forex or futures, whether you're a swing trader or you're a day trader, they have multiple different account types, and they have some of the most competitive pricing that I've seen in the industry. And check out this publication from Deloitte, who did an audit during a select period of time on Ola Prime and its payout legitimacy. One of the big things that Ola Prime is well known for is their very fast payouts. They have this posted up all over their website as one of their main reasons that traders like them. From what we've seen, they also have a very strong reputation overall within the trading space, and they are a proud sponsor of our everyday trading stream here. And for a limited time, if you use our promo code that you can see on the screen right now, A1 Trading, you can get 20% off any of their accounts. And using our discount code lowers the barrier to entry, meaning that your challenge costs you less and gets you that much closer to potentially getting a payout someday. Of course, to throw my 2 cents in there, I'm a big fan of not trying to get funded until you feel you are actually ready to do so. So if you feel you have the skills, if you feel that your trading is up to par, and you do your due diligence on Ola Prime to see if it's right for you, then make sure use our promo code to get that extra discount at checkout, and we'll be dropping the link to them down below in the live stream chat. You can also find it in the description, and we'll have a QR code on the screen right now that you can scan if that's easier for you as well. So thank you to Ola Prime for sponsoring today's live stream. Now back to the next show.
What's going on, everybody? Happy Friday. Great day by default. Just like I say every single Friday. Weekend's right around the corner, and it's looking forward to some relaxation. Another day at the pool. Try not to get another sunburn this weekend. I'm actually going to wear a sunblock. I was laughing on Monday, Tuesday, because I had a white streak down my arm where I clearly sprayed, and then it was red all around it. So clearly I got to do a better job this weekend of rubbing it in everywhere. So anyway, hope you guys are doing wonderful out there. Hello, Sluggy. Hello. Guys, as always, if you have any tickers, anything specific you're looking at, let me know. Do have a few things thought I would mention, throw up over here. I did get into a Nikkei short last night, guys. So it finally kind of did what I wanted it to do. So we'll see if it works out. But Nikkei, of course, giving us a very bearish -8 score. Over here, you really only have the one item going against it, and that's the seasonality. Obviously, today's the last day of the month, so we'll see what seasonality looks like for August starting tomorrow, which, by the way, August is my birth month. Don't forget out there. But yeah, so and I have a birth month. I don't have a birthday. I have a birth month. So the whole month is mine. It's all tigers. Okay. Is that fair? But anyway, yeah, so we'll take a look at Nikkei over here. Obviously, all the dollar pairs are still looking dollar weakness. So we'll take a look. I think pound dollar might have even dropped into a demand just a minute ago. So we'll take a look at that as well. But just leading off with the Nikkei over here real quick, guys, show you what I'm looking at. Obviously, we had all the moving averages start floating downwards. We had this break, a structure right here, but we did not yet bounce into the demand that I was keeping my eye on the 4-hour time frame all the way down here at the bottom. So I think we might still have a little leeway on this to possibly go further down. If we take a look on the left, or I'll just full screen it, take a look at the zones that I was looking at over here. I was looking at 2 zones, guys. So one of the zones was this one here, which kind of had a little bit of a former double top, a major swing high that was going through it. So, you know, possible resistance becoming resistance again. That was one idea that I had. I just didn't quite like it because, well, there was a zone a little bit higher up, number one, but the volume was a little stronger on the leg out. So, you know, this leg out volume right here, we have a green candle all the way at the bottom. It's not even a yellow candle. At least this one gave us above average volume, above average institutional type activity that, you know, continued the formation of that. So yeah, natural thought is to put a rectangle around the indecision candle that's just above it. It looks like kind of looks like a cross, guys. So not much of a body, wicks above, wicks below. That was really the starting point for me. So and with obviously with a healthy supply zone or with a healthy stop loss overhead, I kind of just put it right here at this most recent swing high. We get down to a 1-hour chart, and we had a very big move up at one point. Okay, whenever the volume started picking up from the well, the thick of the Asian session, and a lot of that was probably based off of the well, the pending rate decision that was to come, and then not to mention the intervention that did take place where we saw the dollar yen drop 484 pips. So more on that in a minute. But anyway, we pushed into it, kind of had a little bit of a, I guess you call it more like a shooting star type candle. Okay, I don't really get too deep into the candle formations themselves, but that's basically what gave us a wick above. And then we had a big candle coming out of it to the downside. So the way I kind of played this, and I'm trying to remember, let's see. Yeah, that's what I did. So when we got that big candle down, I was looking just for a little bit of a retracement back up, just to kind of give me a little bit higher of a price. And then when we got up to this area, this is basically where I shorted, was right here on this candle. So gonna let her fly, let her do its thing. Obviously, it's getting a pretty nice reaction over the last, 15 minutes, 30 minutes. So overall, it's looking all right, I think, at the moment. Take a look over here if I have it. Yeah. Okay, this is a little more accurate. This shows exactly where I got in. So again, it was right here on this candle right here. And the other thing that I was looking at was the moving averages. So over here on my execution time frame, again, my 1 hour, after I have found the 4-hour zone, okay, 4-hour supply, 4 divided by 4 is 1 hour. This is where I want to go verify my moving averages. So got the 50 EMA below the 200 EMA. That's a good picture. And then obviously I want the 200 to get pierced. So it pierced it, and then it went higher up. This is how I like to, personally, this is how I like to see my moving average, my 200 EMA. If I'm trying to short something, I'd like to see it pierce before it even touches the zone. That way it gives me just a little bit higher of a premium before I'm ultimately taking the other side of it. So we're in that trade, just a simple take profit down here to the swing low. I think, in fact, I've got it right on that blue dash line, which is a former swing high way back over here on April 27th, which is actually my sister's birthday. How about that? I didn't realize that was the day it formed. But anyway, yeah, it's looking pretty good right now. Obviously, it's the first 23 minutes of the cash open, so we'll see how this thing works. And depending on where price is, whenever the day closes, if price is well on its way down to, towards a take profit, even if it doesn't quite get there, I'll make a decision at that point if I just want to close it and take what the market gives me today, or if I want to, potentially keep it open for the Sunday open over here. Now, I don't know that I want to do that. I'm still a little bit skittish, guys. I don't know about you, but I'm still a little bit skittish about holding trades open. Remember, I don't have the bigger stop losses like Nick or like some of the other guys, to where, a little bit of a Sunday gap may not affect them. But for somebody like me, where I've got 50, 60 pip stop losses just on average, that I'm just right there in that gray area to where I don't know if I want to quite chance leaving it open. So, but if it gives me enough buffer down in this area, then I might consider that. If price were to reverse and stay up in this area close to where I entered, I'm out. It's as simple as that. So I'll just see how the intraday session treats this and go from there. Get about an hour before the end of the intraday session, then I'll probably decide at that point if I want to just go ahead and take whatever little profits I have or let her fly. What you guys got over here? Hey, Tiger, any update on Kiwi dollar? Says Harshal. Yeah, let's go look at that. Kiwi dollar, pound Kiwi for Obo Ola. Yeah, let's go look at those for you guys. So obviously it's bullish. Number one on the top setups. In fact, it's number one right there with the pound dollar. So I think dollar yen is the only one that's not on our bullish bearish list, guys. It's still pretty well neutral. Of course, it's getting chewed to pieces and very volatile from the rate statement they had last night. By the way, they had an 8-1 decision to keep rates the same at 1%. They did have one dissenter, I forgot his name, that wanted a 25-point hike. Takata Hajime. How do I say that? Takata Hajime considered that the situation had shifted to a new phase in which the bank needed to adopt a nimble approach in response to upside risks to prices. So that was the one dissenter for them. So they're a little more joined at the hip versus the Fed here in the States, where we, of course, had the 9-3 decision the other day. They were 8-1. So you did have one calling for that 25-point hike. And they're talking about their inflation, but I got to tell you guys, and then I'll get to your chart. Let me just show you guys this real quick. When it comes to Japan, man, let's go down here. Let's go to the economic data, inflation, CPI. Look at Japan's CPI. So you guys always hear the target rate's 2%, target rate. Well, they've been at their target rate since February. Well, basically since January. They were right at the 2.1%. They're talking very similar talk to the way we're talking here in the States and some of these other major currencies or major economies of the world. Whereas we're at the 3.8% or 3.5%, I think. 3%, 4%. The world's caving in. That's what you hear all over the news here. The inflation is sticky, this and that. Japan actually has a pretty good little spot there. They've been below the rate, and they're still talking like they're in 3% and 4% and 5%. So it's kind of crazy. This is what we want to see. We don't want inflation to go to zero. That's a bad thing too. Okay? We have to have some growth. We have to have some value, increased in value of goods and services, things of that nature. So they're right there in the sweet spot, even just a little bit below it. But anyway, and yet you still had one of their guys calling for a 25-point hike. I haven't quite figured that one out myself. I haven't really dug too deep into it, but just looking at the 30,000 foot view, it's like, what the hell are you talking about? All right. Anyway, go back to the I guess pound Kiwi was first, wasn't it, on the list? So let's go look at that. Pound Kiwi right here. As always, what's my daily telling me over here? Daily's telling me everything's going south. Chewed through all these zones. Looks like it's been a minute since I've even looked at this one. Yeah, old zones up here. Get rid of all that nonsense. So EMAs are pointed down. We did break this little bit of support that kind of was here for a while. Broke through all that. Okay, broke and closed. So that's a good sign of weakness. EMAs pointed down, alligator's mouth pointed down, the whole 9 yards. Lower lows, lower highs. Okay. Permission to short, sir. Going over here to the 4-hour chart. What do I see? Okay, right off the bat, I see a 4-hour supply up in this area here that could potentially come into play at some point. We've obviously broken this structure over here. This was one of the last major structures. Did we get a close? Yes, we did. Got a close on this candle. We rejected it for a while yesterday morning at the start of the session, the U.S. session. But then finally we got a close overnight while I was asleep, looks like. And now we are just looking for a retracement. Hey, what's Edgefinder telling us over here? Pound Kiwi. I think we're still, what are we, pretty well neutral on this thing? Pound Kiwi, Pound Kiwi. Go look for Pound Kiwi over here on my neutral list real quick. Pound Kiwi. Yeah, there you go. -2. Okay. So technicals clearly down. We just saw that. Looks like the smart money, dumb money combination is favoring the shorts as well. Today, after the bell, we do get an updated COT report. Okay. So that'll give us some new information to chew on over the weekend to bring to you guys on Monday. However, the data appears to be still favoring the pound over the Kiwi slightly. So what is our Eco Surprise Index showing us? So pound exceeding on 2/3 of its reports. Kiwi, or wait, what did I just say? Swiss? Pound Kiwi, right? Is that the one we were just talking about? Yeah, Pound Kiwi. +2 on the Eco scoring. Pound Kiwi. Pound Kiwi. Well, yeah, the Kiwi is the strongest. Okay. Well, that's kind of a weird picture, isn't it? When you see a +2 for Pound Kiwi, meaning it should show pound strength. However, the Kiwi is actually the strongest. It all has to do, guys. It's kind of hard to explain. Maybe Nick could help us out with that on one of his next skits, but it really just has to do with how much better does the pound do over the Kiwi and or vice versa. Let me go take a look at this. Let's go to my Pound Kiwi over here. I'm curious to take a look at this on a deeper level real quick. Neutral. Okay, so a lot of neutrals. And then you got these three here to where it does, in fact, favor the pound over the Kiwi. Okay, so probably just two of the few misses that the Kiwi has had. It just so happens that's the ones that the pound has strength over. Yeah, that's interesting. That's just interesting. It makes sense, but it's kind of hard to explain, guys. It really has to do with which one favored the pound more on the PCE, on all the data, the CPI, and so forth. Yeah, I'll get off that subject. I don't want to confuse everybody because I'm kind of confused myself, to be quite honest with you. Point is, it's neutral. Okay, so if I'm just looking at the technicals, it would probably be all about that supply right there. Maybe I'd be keeping an eye on. Got a little bit of a confluence right here on this 1 hour. So there's a little bit of a 4 hour, 1 hour supply confluence on this. It's obviously close to the origin of the overall strong move down, as close as you can get. But the key is this structural break right here. When we get that structural break, it takes a lot of money to break a structure. Remember that. And a supply demand zone. It takes a lot of money to do that. So inevitably, when that happens, it obviously creates our impulse move. Okay, this would be a bearish impulse move. And then we want to find where the underlying strength is within it. So up here is, yeah, it's not my favorite, I got to admit, overall for Pound Kiwi. Even if we had a bearish bias on this, I would probably still steer clear. It's not strong enough of volume for me to get excited. Yes, it gave us a gap, but look at our leg out volume. We have a green candle. So if I'm only looking at the zones, that would be the zone, but there's just no strength there in my opinion, in my humble opinion. Hope that helps. I think there's better pound pairs out there, like pound dollar, obviously, pound dollar longs. And I would be afraid to try to, yeah, I just don't like it. I'll just leave it at that. Pound dollar, let's see. Yeah, pound dollar was the other one. So let's go look at that. Let's go look at something I know a little better about, or I feel a little more confident about. How's that sound? So pound dollar, we did get our moving averages flip on us, which is a good thing to the bullish side. So you can see our dark red 8 EMA is now comfortably above the 21, starting to poke up. We had a little bit of a death cross. Okay, that's good to see. Death cross to the bullish side. Bullish death cross, I guess you could call it. And now we want to see pound strength, dollar weakness. And as far as demand zones, guys, I'm a little torn on this. I feel like, because on a 4 hour time frame, this by definition would be the closest one that I've got. There is one down here at the bottom, no doubt. which ordinarily I would want to go closest to the origin of the overall strong move, which would be down here by definition. But just a couple things on that. Number one, there's a lot of candles down here. I don't really like that picture. Okay, if I'm trying to take this particular one, if I'm being very aggressive, you can see those white lines. That's the equivalence of the 1 hour demand within this 4 hour. That is a 4 hour, 1 hour confluence. An aggressive approach would be to say, hey, take this 1 hour candle here, because we do have a leg out candle. That is what color? Red, right? Ultra high volume on this leg out candle right here. Well, that's not a huge surprise. I mean, we had PCE, we had what else did we have? PCE and GDP, the advanced GDP number that came out yesterday. So we got a very strong spike. Dollar weakness. By the way, all the other currencies got strong. Dixie over here on the left. This is the DXY going down. Jexy, Exy, Bexy, Kexy, Sexy, Exy, Zexy, they all went up. This is all of our major currency indices just flying upwards while the dollar is falling into the basement. So I thought that'd be a good visual for you guys just to understand that. And then not only that, you take a look at all the dollar pairs like we looked at time or two. All the dollar quote pairs flying upwards, all the dollar base pairs flying downwards. Kind of looks to me like this picture kind of reminds me, I don't know why it reminds me of it, but it kind of reminds me of the Predator when his mouth opens up and he's got those ugly ass claws or teeth coming out of his, protruding out of his head. That's what each of those reminds me of. I don't know. I just thought that was funny. Crickets. But anyway, so I think this is an aggressive approach, but there's no denying the strength of that ultra high volume candle, the VSA candle, guys, forming that expanded range candle. Now we do have another one down here. So there's two of them. So I don't know. Take your pick. If I get into this trade, guys, I'm probably just going to do a partial position because it is high on the curve. If we shoot through this, well, then I'm going to go after this one, put a regular position on it, regular risk down here at this origin. Or maybe not quite a full position, because if it chews through all that, remember, we got yet another zone down here. So could this right here present a lot of stop losses? We talked about this briefly yesterday. A lot of stop losses, a lot of sell orders that a bank could utilize along with the main demand zone that I've been watching for 2.5 weeks and fulfill a position down here. So there's a few options here, guys. Maybe a light position here, maybe a medium position here, maybe the ultimate would be the major position down here. It all depends on what the candles do, what kind of bullish look I get. Do I get a bullish engulfing candle on a 1 hour chart? Candle with a wick underneath. Do I have another yellow or red VSA bar start to spike as we're leaving this zone? If so, I'll take that one with a light risk. And if not, if it doesn't give me the trigger candle, kind of like Nikkei didn't give me the trigger candle on that first trade, the first zone that I was looking at down here. See, if you look at the hour, when price entered that 1 hour or that 4 hour zone, when we did get two bearish candles, they didn't even break the structure of the candle to the left of it. That red candle did not break this candle. That candle, while it is red and it looks pretty decently bearish, did not even break that candle. And all this happened, by the way, in what kind of volume? Shit volume. That's another reason I personally didn't take that short. There was just no volume there. That's the latter part of the New York session by itself. Asia's still sleeping, drooling on their pillows. They're not quite awake yet. So I wanted to wait till the Asian market volume came in, and that's why I waited for this one here. So anyway, yeah, that's my thoughts on pound dollar. I just want to see what happens if I get a confirmation entry, so on and so forth. In fact, I actually came up with some pictures, guys, on a project I'm working on. Let me just over here on another page look for this picture for you, and I'll show you a proper confirmation entry. Let's see, right here. Here we go. All right, so I'm going to copy and paste this over here because I don't think you guys will be able to see me just opening a picture. copy, paste, or copy. Yeah, here we go. All right, let's check this out. Let me full screen this for you. Okay, so this is the idea behind a confirmation entry. Lower lows, lower highs, bounce into the zone, change a character to the upside. I know you guys see me draw this a lot. Change a character, which means this is now a bullish impulse move because it broke structure. And then we wait for a retracement because oftentimes what's the law, the rule of 4 say? Okay, 1 hour divided by 4 is what? 15 minutes. If I go down a 15-minute chart, oftentimes I'll find a nice demand zone down there. You use 61.8, you can look at a 50% retracement, however you want to look at it. But the whole point is this. That green highlight is the most important part. Are we at least given 50% confidence to say, hey, this thing's trying at least to turn around? I have pretty well faith in the demand zone to catch the other piece of it so we can get our move up. So that's what I'm looking at for, confirmation entry up here. Down here, I'll have a little more leeway, especially if we get all the way down to the, especially if we come all the way down here, because I think there's a lot of liquidity built up right here. How far away price went, broke one structure, broke 2 structures, okay, broke another minor structure, came up to a 4th. So there might be a lot of liquidity just kind of hanging out down there. Okay. Now, again, that's 3 opportunities, not financial advice. That's just what I'm looking at. Euro pound, you're bullish, says Tony Trustworth. Yeah, dollar yen's all over the place, guys. All over the place. There's your 1 hour chart. Okay. Again, 400 and whatever it was, 480 something pips down. All of a sudden you get a 288 pip push back to the upside. And then you follow that with a 233 pip move down. And then you follow it with a 200 pip move back up. And now currently over the last hour or so, hour and 10 minutes, we've already dropped 161 pips. Guys, that's tough to trade right there. That's very tough to trade. So, I've got absolutely zero interest. Whether we had it on the top setups for bullish or bearish or not, I don't got any interest in trading something that currently has a range of about 150, 200, 250 pips. That's just too crazy. Too crazy. I'm going to let the dust settle on this and reevaluate dollar yen next week. You mentioned euro pound, though. You said you were long euro pound? Okay. Well, the EMA's flipped bullish for you, so that's good. You broke these structures. You did not yet bounce into the overhead resistance, so that's good. Okay. Kind of hard to see, but the EMA has flipped. A little bit of a death cross. You got the 8 above the 21, so that is giving a little bit of a bullish look. Yeah. Let's see here. 4 hour. Okay. Just for me, just looking at euro pound for the first time, I see a demand here. I see a demand a little further down, but in the immediate picture, I do see that. Euro pound. It's pretty well zero. So this looks to me like just mainly a technical play because you don't really have any data for or against that. Good luck. Yeah, good luck on that. Hopefully you make some money. Am I bullish on Israel? I work with people in Israel every single day for my other project I work on. I'm actually interested in visiting that place one day. I really want to go. But are you bullish on Israel? Yeah, I don't dig that deep into that stuff. I'm a price action trader. I just want to know the basics of the data on the top setups. I want to know the basics of the geopolitics to see if it's going to affect anything. Yeah, I don't know. I don't really have an opinion on Israel. Silver, did you already do that? I can do silver. Yeah, let's look at gold and silver, guys. I'll end it on that because I know we got 3 minutes left. So gold is still making those higher lows I told you guys about. I still need to see the yellow picture, guys. Nothing has changed for me on gold. It's basically kind of closing in on itself. Let's just go to a full screen view here. And then we'll get to silver right after. Okay. What are we getting right here? What does it look like it's doing? Well, what I see, if I can find my tool, I don't know. It feels to me like it's getting just a little bit of a higher lows, lower highs in this more immediate area since for the month of July. Feels like it's kind of closing in on itself. That's why I have no interest in gold. That's part of the reason. Because until we break these overhead structures, this call wall that we have right here, number one, the 30-minute supply zone that lies in there, the old zones over here that still has a little clearance above it. Remember, still talking about this daily supply. Until we break that, I have no interest in paying attention to gold whatsoever. Unless it starts breaking to the downside, right? Whether it breaks the upside or the downside, I got nothing. It's just two sideways. This is an equilibrium. This is the black hole, guys. This is where a lot of times retail traders come and they, well, they get chopped to pieces, number one, especially when they're trading on the smaller time frames. But it's just not moving. It's just not going anywhere. It's stagnant. But you asked specifically about silver. So at least with silver, we're still seeing a steady series of lower lows and lower highs. Okay. Remember, gold has a higher low right here, higher than this low. Silver does not. It's still lower. It's still lower lows. Lower high here, lower high. So see, it's still within the structure. It's just like gold, though. It's boring sideways ever since basically, well, the whole month of July. So I don't see anything in it. Now it's bullish, I think. Are we still getting bullish signals over here on the Edge Finder? Let's get rid of my neutrals, get back to the regular list. I think we're +4, +5, or yeah, +6 for silver. Okay, yeah, +6. So bullish. Yeah, I just don't see anything, guys. I mean, if I go down to some smaller time frames, I'm sure we'll bump into some stuff. Okay, if I look at this 4-hour, we did break this structure here. But again, just sidewaysness, sideways trend. You know, you got uptrends, you got downtrends, and then at times you'll get the boring old sideways trends. But if I'm just looking at some zones, if I drop it to a 2-hour, I do have a 2-hour demand right here. You could make the argument that you got some liquidity under here for all these stop losses. The sell orders from these buyers here that are trying to push price up, even though they keep getting pushed back down. So I see liquidity really on both sides of this, right? We'll say, I don't know. Maybe we'll just draw it up like this. Okay. Liquidity up in this area, right? Shorts pushing price down, shorts pushing price down, shorts. They got to put their stop losses somewhere, except the liquidity up here is what color? It's green, right? It's buy orders. So there's buy orders hanging out here. There's sell orders hanging out down here. There is a 2-hour demand zone, but it might be too much in the thick of it. If I were to have any interest if I had some excuse to buy silver right now, I would not be putting a stop loss immediately under that zone like normal. I would be having to give that sucker a lot of leeway because I don't have any clue how much, you know, the range of all these these stop losses here, these sell orders. Who knows how big that is? And then remember, we got the low. So this is obviously our swing low, current swing low. I just don't like it. I don't even like it on a smaller time frame. 1-hour chart, don't like it. Let's go to a 30-minute. 30-minute demand. It does give us a gap, but the leg out has no volume. It's green, so I don't like that. What does it look like on a 15? Any better? Nope. Just as bad. I don't like it. There's nothing. I'm trying to go down to the small time frames, and I just don't like it. I don't have, with my trading strategy, guys, I don't have any play whatsoever on gold and silver until we start breaking some structures. Okay. I already showed the one on gold, but silver, I would probably at least want to see a break of this, but then we got to deal with the overhead supply zone. So see, we just got a lot of landmines in the way as far as I'm concerned. So gold at least gives us a little bit better of a play in the immediate term. Okay. Because if we do get a break of what I want to see and we get a retracement to find a new zone, of course I have to update this. Okay. If we get a break above the rest of this supply, this mitigated supply, I need a break or a retracement. Maybe I can find a new demand zone because at least this will offer me clearance to the next overhead supply zone. So that would at least give me a decent reward to risk to where I can profit or try to profit, attempt to profit on this move right here. I just don't have that on silver. Oh my gosh, it's 9:18, guys. I'm sorry. I got to get out of here. James is going to shoot me. So yeah, guys, I hope you learned something today. Sorry I went over a few minutes, James. Stay safe today. Have a good weekend. And we'll be back next week to do it all over again. Take care.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.